Okay, good afternoon to all of you. Welcome to this day 2, that is on business valuation. Yesterday we had gone through the complete understanding of paper on performance management, strategic performance management. So now day 2 and day 3, as I told you yesterday, we will be spending on business valuation. I have already shared these slides with the coordinator, and coordinator would in turn share these slides with all of you. So you will also have these slides as a reference material to study for the exam. These slides contain, it's a PDF file, it contains conceptual understanding on valuation, various terms, concepts used in valuation, and followed by that there are numerical problems in the form of small caselets or case studies. Some 5-6 caselets are there along with an approach note, along with the solution. Everything is covered over here, and therefore you can go through these contents, and any doubts or difficulties you can ask me in the chat box, you can write to me. We will start with business valuation, corporate valuation, all one and the same. This paper is again of 50 marks. Before I go through the PPTs and I start taking you through individual concept, let me just quickly give you an overview of this subject from exam point of view. So business valuation paper again is of 50 marks. First 10 marks is multiple choice MCQ, that is covered. 5 questions of 2 marks each are asked. You have to give the correct option, pick the correct alternative, write that correct alternative, and show the workings. If it is a numerical problem, then you have to solve that question, you have to get the answer and show the working. If it is a theory question, then you have to write the logical reasoning, the explanation or justification why you feel answer B is correct and not C, why A is not correct, why D is not correct, why only B is correct. So you have to give the justification or valid explanation, reasoning, even for a theory question, and that is mandatory because 1 mark is for writing the explanation or justification and 1 mark is for solving, that is getting the correct answer. That means getting putting the tick on the correct alternative. So that is the breakup of 2 marks, working 1 mark, and correct alternative you have identified, that is 1 mark. So that's a 2 mark question that carries 10 marks. So total 5 questions of 2 marks each that are asked. Then you have this starts from, in section B, you start from question number 5, and question number 5 is MCQ, select the alternative, and thereafter you have question 6, 7 and 8. As I told you yesterday, out of 3 questions you have to attempt any 2. Question number 6, 7 and 8 each carrying 20 marks. So question number 6 has AB, 7 has AB, and 8 also has AB. So there are 2 subparts, each one of 10 marks. So total marks allotted to each question 6, 7 and 8 is 20 each. Out of 3 questions you have to solve any 2. So either 6 and 7 or 7 and 8 or 6 and 8 you can solve. So any 2 questions, and most of the time you will find all 3 questions. I'm using the word most of the time. Most of the time you will find all these 3 questions are numerical questions. So we can say that any 2 questions if you attempt, you can score even 40 on 40, 40 out of 40, because both are numerical questions. Very rarely you come across a case where some part is theory part in one of these questions or in any of these questions. Mostly they are practical questions, and therefore here you have to demonstrate your calculation skills, analytical skills, and you should be correct in your calculation. Yesterday I mentioned to you these calculations are very lengthy, very time consuming, and all the more therefore you have to be very, very particular. If any small mistake you make in solving the problem, and throughout end that mistake is carried forward, your answer goes wrong. Because your answer is wrong and because your control figures at each stage is wrong, you lose all the marks, and it is a question of 10 marks, sometimes 12 marks also. So bifurcation can differ, but total weightage is 20 for each of the questions, right? And 10, 10 or 12, 8, something like that. So you have to be, or even 6, 6, 8, that way also it has been asked. So different past question papers, if you study, you'll find permutation combination 6 plus 6 plus 8, 20 marks, right? A, B, C, 3 subparts, out of which 2 are numerical, 1 is theory, or maybe all 3 are numericals. any permutation combination. Topics which you have to study for this business valuation section, section B, are number one, DCF technique of valuation, discounted cash flow technique of valuation, which makes use of two methods. One is FCFE, free cash flow to equity, and second is free cash flow to firm, FCFF. We are going to solve some problems of both these types in today's class and tomorrow's class as well. They are there in the PPT. So when I run through the PPT, obviously you will come to know, but just an overview I am giving you. So two techniques which are DCF techniques. One is FCFF, other one is FCFE, free cash flow to firm and free cash flow to equity. Both methods of valuation are time consuming. Once you start a question, it goes on and on, because you have to discount the future cash flows to present value. Then you have to find out the terminal value, present value of terminal value, etc., etc. It's a laborious process, a time consuming process. So you have to be very, very careful and cannot afford to make mistake in any step. Any step you make mistake, all subsequent calculations will go wrong, because it is a lengthy sum. Sometimes even weighted average cost of capital is not given, what we understand as WACC, 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 weighted average cost of capital. That is not given. Purposely it is not given in the question. KD is given, cost of debt is given, pre-tax. Convert that KD into post-tax, KD post-tax. You are given KE, known that KE is also not given. So using CAPM, capital asset pricing model, you have to find out KE, cost of equity. So your understanding of financial management, strategic financial management, is one of the subjects you are studying in the group, and in group number 3. So you have to apply all those learnings here when you are calculating WACC. KD given pre-tax, convert to KD post-tax. KD pre-tax into 1 minus T is KD post-tax. Then find out KE using CAPM. Apply formula for WACC and get WACC. If that WACC calculation itself is wrong, all are final students, and therefore time and again I am saying, if my suggested answer says WACC is 15% and you get the answer 14%, your entire discounting of future cash flows you are doing at 14% when you are supposed to do at 15%. I hope you are understanding what I'm talking. The WACC is 15% and you are calculating WACC at 14. You are discounting all future cash flows at 14, which is not correct. And therefore all calculations of present values, etc., go wrong. The entire problem, I say, goes out of your control. To avoid this, you have to be very particular. If the question says KD pre-tax, you convert it into KD post-tax. If question is silent on this, you assume that KD is pre-tax, multiply by 1 minus T, KD pre-tax into 1 minus T will give you KD post-tax. And then you apply KD post-tax for calculating WACC. This is how the process goes. We will understand this more in detail with the help of numerical problem, but just an overview I am giving. So these are two methods used in DCF technique, FCFF and FCFE method of valuation. The third method which is used is dividend discounting model, typical dividend discounting or profit capitalization model. In dividend discounting model, future dividend we discount to present value, right? And all of you are aware of the formula D1 upon KE minus G. P0, intrinsic value of a share. P0, intrinsic value of a share. P0. P0 is today's price. 0 means it is 0th year. So in today's times, at the beginning of the year, in today's worth, what is the value of a share? P0 is equal to D1. D1 is expected dividend at the end of the year, divided by KE minus G. Divided by KE minus G. Expected dividend at the end of the year is D0 into 1 plus G. See, we go logically. The present dividend or past dividend which has been declared by the company, you have to estimate future dividend. So multiply that by 1 plus G. Apply the growth rate to past dividend and you get future dividend. This future dividend, if it is for 1 year, there is no problem. But if it is a stream of years, stream of years, for year 1, 2, 3, 4, 5, then obviously for each year's dividend, you have to discount to present value. So D1, D2, D3, everything you have to convert it to present value. So that is present value of future dividend. And this sum total is called sum total of present values of future streams of dividend. Sum total of present values of future streams of dividend. That is what is one part. Now we will find terminal value, find out present value of terminal value. So dividend in the 6th year, it is expected that dividend will grow uniformly at a uniform rate years after years, and therefore find out the present value of the terminal value of the dividend. That is called dividend discounting model or constant dividend growth model. Constant dividend growth model or dividend discounting model. Constant dividend growth model, constant dividend growth model or dividend discounting model. Each word I am emphasizing, and you have to understand. If the question is calculate the value of share, intrinsic value of share or value of business, whatever, using dividend discounting model or constant dividend growth model, it is one and the same. That is the third method. So FCFE, FCFF, constant dividend growth model. Fourth one, we understand earning capitalization approach. Earning capitalization. Future profit is capitalized. Expected future profit is capitalized at cost of capital. Cost of capital is WACC to find out the value of the firm, value of business. Again, I repeat, it is called earning capitalization model. Future earnings I capitalize. Capitalize means divide. Future earning I capitalize. I divide by KO, overall cost of capital. KO is overall cost of capital called WACC, weighted average cost of capital, and you get value of the firm. This is earning capitalization model. While estimating the future earnings, you have to eliminate, while estimating the future earnings, you have to eliminate the effect of non-recurring abnormal items. Any item of income or expenditure which is non-recurring, abnormal, unusual, that you have to eliminate. If based on the historical data, based on the past financial results, you are estimating the future profit. So by doing so, non-recurring profit, non-recurring items of income expenditure, non-recurring, abnormal, unusual, extraordinary, all one and the same, you will have to eliminate. Plus minus karna padega. That means if it is an expense which is extraordinary, say voluntary retirement payment, lump sum payment made to VRS employees, voluntary retired employees, that is only one time event in the life of the company. Bar every year company doesn't make VRS payment. So obviously, therefore, that is a non-recurring expenditure. Any such non-recurring expenditure has to be added back to past profit in order to estimate future profit. Any non-recurring income, windfall gain in the earlier years will have to be deducted from the past profit to get future profit. So we estimate the future profit, that is called future capital, future earnings, and that we capitalize at cost of capital and we get value of the firm. This is earning capitalization approach. That is another method. One more method used for valuation of business is comparable company approach, comparable firm approach. Now this is not a DCF technique. Comparable firm approach is also called relative valuation method. Relative valuation method. It's again a lengthy process, but it is very simple. Students always pray, let there be one question in the exam at least on comparable company approach or relative valuation method, because the approach is standardized approach. Approach is standardized approach. You follow the same path. I will take you through the steps involved in relative valuation method. So that is another approach you have to study. So by and large, you have to study mainly 5 methods. I repeat, FCFE, FCFF, free cash flow to equity and free cash flow to firm, dividend discounting model. All three are part of DCF technique, discounted cash flow technique. Fourth one we discussed was earning capitalization model, which ignores time value of money. Earning capitalization model is based on financial statements which are subject to window dressing, and therefore we say not a foolproof method, not a reliable method, because future estimate of profit is not based on past performance. It need not be necessarily the reflection of the past performance, and that because it is subject to window dressing. Past financial statements are based on historical data and subject to window dressing, and therefore you cannot estimate future profit based on past results. Every time the figure may not be reliable. So to that extent, this method suffers from limitation of window dressing, historical data. I'm talking about earning capitalization model, and most importantly is it does not make use of time value of money, and that is why it is not realistic. But still we keep the results at the back of mind. We don't condemn or criticize any method of valuation. Please remember, we do not condemn, we do not criticize any method of valuation. Every method of valuation is important in its own place. There are pros and cons, and different entities make use of different methods of valuation for different purposes. So one cannot say that no company uses nowadays this method or that method. ऐसे कोई बोल नहीं सकता. In real life, every company uses some or the other method according to the complexity of their business, according to the purpose, the need for valuation, etc., etc. and therefore we have to keep the results of our valuation exercise at the back of our mind. We have to keep the results of valuation exercise at the back of mind, use those results for decision making. Ultimately, in this paper, we are also learning how do we make use of these valuation results for decision making. Paper is on strategy, strategic business decision making. That is at the back of mind. So valuation is only a via media. We are calculating the value of business, but finally it is for decision making. That is one part of valuation. Generally, you will find two questions of 10 marks reflecting in the question paper, one on DCF technique, one on comparable company, something or any permutation combination, but valuation of business. Second topic in the syllabus is valuation of intangibles. So you have separate, the paper itself is on valuation. पूरा 50 मार्क वैल्यूएशन के ऊपर है, and therefore every question has to end with, must end with value of equity, value of bond, value of business, value of firm, value of enterprise, enterprise value. Every question ends with value because question paper name is itself valuation, business valuation, and therefore valuation of intangible you cannot omit or eliminate. It includes valuation of brands, valuation of goodwill, that is intangible mainly. I think in TY you have learned valuation of goodwill using financial statement approach, using balance sheet approach. But here in this paper we will understand valuation of goodwill using other approaches also, valuation of brand, copyright, technical know-how, valuation of human beings, that is manpower, human resource. HR valuation is a separate topic in the syllabus. So there are different models which are used, for valuation of different models which are used for valuation of human resources, and those models are you have these models which make use of once again the technique of actuarial science. What we have heard of actuarial valuation is used, where in insurance business generally the actuaries will make use of the total number of years of service an employee still has, the balance number of years of service and number of years of service which is over. So based on the remaining period of service, the age of the employee, which category that employee belongs to, skilled, semi-skilled, unskilled, then what is the pay scale of that employee who is on the payroll, latest drawn salary, vagara, vagara. See, these are the parameters which are used. We will solve one of the questions on valuation of human resource also as an asset, and these models which are given traditionally, they have been used in practice by some of the IT companies. IT companies use these models for valuation of human resource. Human resource is an important asset in the valuation of business. Human resource is an important asset in the business of the company, and therefore valuation of human resource as an asset is an important task. So we will understand how to value human resource. That is a separate chapter in the syllabus. Valuation in context of mergers and acquisition, again a dedicated approach. You will find at least one question, at least one, there may be two also, but at least one question of 10 marks being asked every time in the exam on valuation of business in context of M&A, mergers and acquisition. All of you know that valuation is done in context of mergers and acquisition to determine the swap ratio. Swap ratio is exchange ratio. How many shares in the new company should be issued to the shareholders of the old company at the time of amalgamation, merger, acquisition, takeover, etc., so that the interest of the shareholder is protected. So we have questions on what is the price earning multiple, PE multiple of a company post merger, P multiple pre-merger, EPS pre-merger, EPS post-merger, market value of equity pre-merger, post-merger. What is the signaling effect of merger on the valuation of a firm, on market value of equity share, etc., etc. We will find varied types of questions. What is the change in the shareholding pattern post-merger? Pre-merger, post-merger, what is the impact? Basically, you are required to analyze. This topic is analytical topic. You are required to analyze the effect of merger, acquisition, takeover, etc. on A, EPS, B, MPS, C, enterprise value, D, value of business, and so on, value of shareholder. So you have to solve such types of problems. There you will find ample practice in the module as well as in the past suggested answers of the question papers on this topic. क्योंकि मैंने बोला आपको every attempt, I have not seen a single question paper where there is no question of valuation in context of mergers and acquisition. It has to be there. Also synergy benefit you have to keep in mind. Operating synergy, financial synergy, synergy effect 2 plus 2 equal to 5. In context of M&A, 2 plus 2 equal to 5 indicates one difference of 1, which is a synergy gain. So invariably questions are calculate synergy gain. What is the effect to the shareholders of the old company? Has new company shareholders benefited because of merger? Has it been worsened or has it been beneficial? So all these types of, and why, justify. You will find generally 4-5 questions are asked. 1 2 3 4 5. 2 into 5 is equal to 10. आप खुद भी paper set कर सकते हो. You yourself can set and say that this data is given. Two companies, A limited, B limited. Data is given. You are given data about the PAT, that is the earnings, the number of outstanding shares, the PE multiple, the market price. Something is given. Something is given. Something is missing. And based on this data, answer the following questions. 1 2 3 4 5. 2 into 5 equal to 10. Typical format of the question, where each question carries 2 marks, sub question carries 2, and 5 questions 10 marks. When I know this question is sure short, why don't I study this? I will definitely study this topic thoroughly, and all types of questions I will solve on valuation in context of mergers and acquisition. That's a separate topic in the syllabus, and we are again going to solve some questions in our class today and tomorrow on this topic as well. There is another topic in the syllabus relating to shareholder value. So here you have concepts of EVA, MVA, and SVA. I'm giving an overview, a bird's eye view of the topics. EVA, economic value added, MVA, market value added, and SVA, shareholder value added. Also one more approach, CVA, cash value added. So because paper is on valuation, this aspect has to be covered. So you'll once again find financial statements of the company are given, compute EVA. And again, an added question to that, the employee performance bonus or performance linked incentive is based on EVA of the SBU. EVA of the SBU, business unit. Uska EVA is reflected in the performance bonus. The managers who are working in the SBU are given performance bonus on the basis of economic value added by that SBU. So first you have to calculate SBU and also calculate the maximum amount of bonus that can be rewarded, that can be given to the managers in this SBU. So something relating to the employee bonus or reward scheme based on valuation, because how much value added by the employee in the business will determine his bonus amount or incentive amount. So these are the topics which are covered by and large. There are some theory, very few, but yes, of course, theory topics as well. So these topics which I sounded to you in the form of numerical can also be covered for theory part, and that is right short note on, or what do you understand by shareholder value creation, shareholder value maximization, value retention, so on. So it is VBMS. So there is a topic called VBMS, value based management system. Those who are attending can note down this abbreviation, VBMS, value based management system. Value based management system is a marriage of dash and dash, marriage of the philosophy, the mindset, which top management has decided that yes, they want to enhance value to the stakeholders and actual implementation of their ideas, their dreams into reality. So how do they bring these ideas or dreams into reality? The implementation plan, a marriage, an action plan, right? That is what is a marriage between the two. That is called value-based management system. So here we use 3 words: value creation, value maximization, and value retention. Creating value is not enough. I have to maximize the value through my consistent performance on annualized basis, on a sustainable basis, and retain that value forever. We have seen examples of companies which have acquired huge value, maximize the value over a period of time. But every company, every product has a PLC, product life cycle, where there is a decline phase. So value also starts deteriorating or depleting after certain years. And therefore, how do you retain the value, right? Maybe in the same form or by bringing the product in a new design or new form. So value retention is equally important. At least don't do any acts which will bring disrepute to the organization, defame to the organization, and none of your practices, business practices, what you follow should bring that disrepute to the organization, should not bring any disrepute to the organization. Otherwise, the value will decline. So that is value retention strategies. So you have enough discussion in your module on these three words: value creation, value maximization, and value retention. All three taken together comprise together known as the term value-based management system. And this philosophy always percolates from the top management and it goes to the operational level. So prepare some of the theory topics also like this. For example, value-based management system or any of these numerical topics which I covered can be asked for theory, but very rarely you will find a coverage of theory in this paper. In this part section, let me be very categorical on business valuation. Most of the time there are numerical papers and therefore numerical questions, and therefore yesterday I told you that concentrate more on part B, section B. Maximum marks out of 50 you will score in section B. Section A has partly theory and partly numerical, and therefore one may lose certain marks in part A, but overall you have to make a good show, cover up all the shortcomings what you have, and ensure that you get 75 plus in this paper. This was an overview I gave you. Sir, how to approach this subject? Again, same thing for this business valuation section B. Also concentrate on questions given in the module. All types of questions are solved in the module. Repeated practice, these questions I always advise students, repeated practice. जब तक आप वो सॉल्व नहीं करते, आप जब तक वो लिख के टैबुलर फॉर्म, कॉलमनर फॉर्म जब तक प्रेजेंट नहीं करते, till that time you don't get the confidence. Just by reading the answer, suggested answer and the question, you understand, yeah, I understand how discounting is done, how terminal value is found out. मुझे सब कुछ समझ में आता है. That much maturity I have because I am a final student. So I understand very well what is solved. But am I in a position to do these questions independently under exam conditions on my own in that 15 to 20 minutes? That is $1 million question. And to get answer to that question, you have to practice these practical questions every time when you are studying at home. So now next 1.5 months when you are preparing for your exams, 1 month, I should say, you should ensure that you are solving at least on a daily basis some numerical sums on some or the other topic of the practical subjects like valuation. Valuation is one of the practical subject. Like that, whichever practical subject you have, you must solve numerical problems yourself. Do practice when you are tired, maybe at the end of the day or something, when you cannot grasp any theory topic. Do study practical problems, solve practical problems. That's the only way to get confidence. Otherwise, the situation may come when you are solving the question for the first time, practically for the first time in the exam hall, in the exam situation, and then there may be lack of confidence, nervous feeling. And if problem goes out of your control, I told you what is the repercussion. You lose entire 10 or 12 marks, because if WAC itself goes wrong, subsequent discounting, subsequent calculations will go wrong, out of control. So bear this in mind, and therefore keep your mind very cool and composed. For all practical subjects, keep the mind cool and composed. This is my sincere request to you. Don't get stressed. Don't take so much of tension. Study everything very hard. Okay, after taking you through the general guidelines, we will now understand some practical numerical problems. Before that, one method I would like to take you through, and that is relative valuation method. That is comparable company approach. Yeah? I am turning the slide, so you can also view the slide. First 2-3 slides are based on the various terms used in valuation, and they are used for section part A. That means part A in the sense the first question, that fifth question, that is multiple choice question. When you are answering MCQ, then there are questions asked on this. That is which of the following is an example of a liquidation value. So you have different terms. See on the top I have given. The words are liquidation value, replacement value, salvage value, fair market value, investment value, yeah, goodwill value, going concern value, book value. All these are terms used in valuation. So first chapter itself is glossary of terms used in valuation. Nobody will ask you give the meaning of, define, explain. ऐसे कोई at this stage मुझे नहीं लगता पूछेगा. But you should be able to understand the difference between each of these terms. and answer accordingly when you are answering question 5, that is multiple choice question. Yeah, we will practice some of them also, so we'll get a fair idea. So intrinsic value is different from goodwill value, different from investment value, from value, salvage value, replacement value, liquidation value. हर एक term का meaning अलग अलग है, and therefore you have to be very clear conceptually, fundamentally on the meaning of each of these terms from multiple choice question point of view. I go to method which is called comparable company approach, direct comparison approach, or comparable company approach. Step number 1 is directly I discuss the steps. Take a company whose valuation you are doing and compare that company with other 3 or 4 competitive players. You have to always take into account 3 or 4 other firms, right, which are in the same industry, which belong to the same risk class, what we call comparable companies, right? So slide says select comparable companies. I have highlighted here, select comparable companies. Analyze the performance of these comparable companies and find out the ratios. These ratios are nothing but multiples or indicators, performance indicators, and all these ratios are relating to the firm value. So you have ratios like market value to book value ratio, MVBV ratio जो बोलते हैं, MVBV market value book value ratio, MV to sales, market value to sales, MV to PBIT. PBIT is profit before interest and tax, earning before interest and tax, market value to net worth, MV net worth ratio, and so on. So you find out these are performance indicators. If I ask you what are the performance indicators of business, top line that is sales or turnover, then bottom line that is net profit, operating profit that is EBIT, you have book value of share, also performance indicator, right, etc, etc. So find out what is the ratio of market value of these comparable firms with their corresponding performance indicators. In short, if I have selected 3 comparable companies, I will find out what is the ratio of MVBV, MV sales, MV EBIT for all 3 companies. I will find out. This is step number 2. Step number 3, find out an average across the companies. I repeat, find out the average across a particular parameter, a particular ratio across the 3 companies. That means I take MVBV ratio of X limited, Y limited, Z limited, तीनों calculate तो किया, उसका average निकालो, MVBV ratio. I call it now average MVBV ratio. Like that you find out average MV to sales ratio, average MV to EBIT ratio. ऐसे average निकालो based on 3 companies indicators, and then that last step, apply the average, apply this average what you calculated to the respective corresponding performance indicators of company in question, whose valuation you are doing. You are doing valuation of A limited, and therefore A limited के खुद के भी performance indicators है, sales, EBIT. So apply these ratios, average ratios what you calculated, to the absolute figures of company in question, company whose valuation you are doing, to their corresponding figures, and then you get market value of this company on different parameters. Market value of this company on different parameters. We call it multiple market values. I get multiple market values. I cannot say value ye bhi hai, wo bhi hai. I have to find out an average. This average can be simple average, it can be weighted average, depending upon instructions given in the question. Whatever instructions given in the question, follow it accordingly. If question is silent, assume simple average. Assume it is equal weightage given 1:1:1 to all the companies. If it is given, fine. If it is not given, then you assume equal weightage. So weighted average generally is found out. We find out weighted average of multiple market values of the company in question, and we get the value of the firm. That is what is the value of the firm using comparable company approach. Comparable company approach is also called relative valuation method. This method has its own inherent limitations. So there have been questions asked in theory form for 4 marks. What are the limitations of comparable company approach of valuation? Now you have to be very specific. That time if you write these are the steps involved in comparable company approach, nobody will listen to you, nobody will read your answer. Steps पूछा ही नहीं है, पूछा है limitations. So you have to write limitations of comparable company approach. The first limitation is selection of comparable companies. Which company I should select for comparison. Why only XYZ? Why not PQR? Why not TSW? Right? There are so many companies belonging to the same risk class in the same business, in the same industry. Why am I selecting only these three companies? Because that is my discretion. That is the manager's discretion, the valuer's discretion. So it is any discretion means subjectivity. The moment you use the word discretion means subjectivity. It is subject to the biased. That is that these are called valuation bias of the valuer, valuation bias, comparable company approach. Yeah, so this is the first limitation of this approach, and that is companies which are under comparison that is subject to the discretion of the valuer. Second limitation of this approach is of course the performance indicator. Uh, Performance indicator. Why are we talking only about the uh, performance indicators in terms of sales, EBIT, book value? Why not something else? Yeah, why not book value? Why not EBIT, before taxation, interest and tax, so on and so forth? So selection of performance indicator per se, the bias, discretion, subjectivity, and therefore not foolproof. The third is weightage, assigning the weightage to each of these performance indicators. Yeah.
सर प्रेझेंटेशन दिसत नाहीये स्क्रीन वरती.
Okay, 1 minute. Presentation not visible on the screen. Is it visible now?
Yes sir, yes sir.
Okay. So these are limitations which I have discussed in the subsequent slide. You can see. Yeah, few drawbacks you can see. Few drawbacks of this comparable company approach. Multiple amenable to misuse and manipulation. I told you that is which are the performance indicators is subject to discretion. Choice of comparable company itself is subjective. That is the second, and the weightage which are assigned, multiples used reflect valuation errors, under or over valuation of the market. That is software companies. So different performance indicators are used in different industries. So we have to be industry specific, company specific, business specific when we are doing the valuation. So comparable company, mainly in your words, you can write these three limitations: selection of a comparable companies for valuation, 2, selection of the performance indicators, and 3, assigning the weightage to each of the performance indicators is subject to valuation bias, perception of the valuer, and therefore not a foolproof method. The comparable company, though these are the limitations, still we use, some of the companies do use this comparable company approach for valuation, and therefore I told you none of these methods you can discard or you can give it up. You have to make use of all the methods at some or the other point. So always keep the results at the back of your mind and make use of these valuation methods for calculating or firming up your conclusion on value of the firm. So we will solve one numerical question on valuation of a company using comparable company approach. I told you it is a standardized approach. Same approach you have to adopt every time when you are solving a question, and therefore it is very, very routine in nature. And once you develop the knack of solving, every time you can, if it comes in the question paper, all of you can get even 10 out of 10. It's like this. It's such a simple question. And students generally wish that let such question be there in the exam, because it is very, there is no discounting. The fourth drawback of this method is it does not make use of time value of money. It does not make use of discounting. Comparable company approach makes use of absolute figures which are picked up from financial statements, and financial statements are subject to window dressing. So these performance indicators, what we have been talking about, ratios of market value to book value, market value to EBIT, etc., are based on financial statements which are subject to window dressing. So how reliable are these figures is a question mark, and therefore many times it so happens that critics condemn and criticize, saying that yes, where are we using the cost of capital, where are you using discounting concept, etc. No, we are not using time value of money concept, we are not using at all in this comparable company approach. So that is also the drawback, time value of money ignored. But all the more from students point of view, then this method becomes very easy, because ना आपको back calculate करना है, ना discounting करना है, ना terminal value निकालना है. It is only calculating ratios. So let's solve one question of this type, which is there in the module. It is exercise number 3. The slide is in front of you, so you can, I will read this slide and you try to solve this question yourself, yeah, on your own. I will also show the approach for this question, the solution that is given immediately after this, right? But after 2-3 minutes of gap, and you write your questions in the chat box, right? Whatever questions you have up to now or otherwise from this question, you write in the chat box. Though it is exercise 3, we are solving it first. This is on comparable company approach. Z Limited is planning a public issue and would like to value the company using comparable company approach based on following data from two comparable companies X and Y. See, we are assigned to all the ratios. Yeah, no, so weighted average ka sub. You have to assign equal weightage to all the performance indicators. Is question visible to all of you? Try to solve this question. You are given X limited, Y limited data, Z limited valuation is asked. So market value MV is given for X limited 900, Y limited 800, Z limited question mark. Book value is given 800, 600 and 500. Replacement value is given 1200, 1100, 1000. Sales revenue 1100, 900,000. Profit after tax 36, 32 and 28. Now, figures could be in thousand, lakhs, millions, don't bother about it. Just concentrate on the absolute data that is given for X and Y. I told you what is the first step. Select the companies, comparable companies. We have already selected X limited and Y limited. ये दो companies select किया. We are doing Z limited. We are doing valuation of Z limited. So Z limited के against we are return market value and question mark. Question mark means you have to find out the market value of Z limited. X or Y की दी है 900 and 800. Obviously Y value is given, so you will find out what is the ratio of market value vis-a-vis each of these performance indicators. That is the next step. So आपको कितने रेशियो कैलकुलेट करने हैं? टोटल 4 और 4 8 रेशियोज कैलकुलेट करने हैं. What are those 8 ratios? You will calculate 8 ratios as MVBV, MVRV. MVRV is replacement value, MV sales and MV PAT. This is what you will calculate for X limited. I repeat, MVBV, MVRV, MV sales and MV PAT. These are 4 ratios you will calculate for X limited. Similar 4 ratios for Y limited. Then you will take the average, and that average you will apply. Apply means multiply. That average you will apply to the absolute figures of Z limited. That average you will apply to absolute figures of Z limited to get the value of Z limited. Yeah, this is the approach I have explained to you also now, how to go step by step in this valuation. Try to do this. My solution is there immediately after this slide. Every question, every exercise, there is a solution given by me, right? I have prepared the solution also, so that will be very handy for you. Just think over and calculate. Maybe 2 minutes. I will take the break, short break, 2 minutes for you to solve, you to calculate. Meanwhile, I'm looking at your questions in the chat box. Questions and write in the chat box. Yes, I'm happy that I'm going through some of the questions. Students are writing. We received it, sir. Okay, that means you would have received the. You have received it. Received my PPT and the slides. That's good thing. Thanks to the coordinator. And one of the student is writing, can your webinar be made available on YouTube? Yes, it is very much available on YouTube. Yeah, it is, don't worry. Yesterday's session also I would have been uploaded on the YouTube, and don't worry, Gayatri, it will be you will be able to, because of poor network connection at your end. You are not my end, at your end, that you are not able to listen to properly, and for you YouTube you can access anytime later on also. I hope you all can see the slides now. Yeah. Okay, I don't think any questions are there. I have seen one student says online exams are here, and therefore tell about online exams. Now online exams, all of you are aware, a separate webinar was conducted. Please understand that this session is not on online exam. So modus operandi for online exam, etc., would have been clarified to you by the president, vice president of the institute, and there have been repeated webinars conducted by them. Clarifying FAQs have been published. Frequently asked questions on this have been published. So you have all general all right, I will show you the answer. By this time, all of you would have at least done some basic calculation. You know what is the approach. So I will take you through the answer. This is the solution given to you. You can look at the solution, look at the approach. Step number 1, identify and estimate the ratios oblique indicators of comparable companies X and Y limited. So you have data for X limited, Y limited, that is MVBV, MV replacement cost, MV sales, and MV PAT. We have calculated the ratios. So MV-BV ratio, we can see one MV is 900 and BV is 800. So 900 upon 800 is 1.125. 1.125. This is how the figure is. Let's see if I can annotate. Yeah. You can see 1.125, 1.125, then 1.13. MVBB ratio 1.125, Y limited is 1.13. Then average we take later on 1.125 and 1.33. Uska average is 1.23. Then we have MV replacement cost 0.75, 0.73. Uska average 0.74. MV sales 0.82, 0.89, and uska average 0.85, and so on. So all 4 performance indicators, we have found out what is the market value. We have found out what is the market value of comparable companies using these averages. So MVBV, MV replacement, MV sales, and MV PAT 4 रेशो हमने calculate किए X limited के लिए, Y limited के लिए, and then we have taken the average, and that average we have then applied. That average we have then applied to the corresponding absolute figures of Z limited. Corresponding absolute figures of Z limited. I have applied those averages to the corresponding absolute figures of Z limited. Corresponding absolute figures means what is the book value of Z limited? 500. What is the replacement cost of Z limited? 1000. So ये corresponding absolute figures है. उसको multiply. Apply means multiply. Apply 500 by 1.23, you get 615 as the market value of Z Limited on the basis of book value. Market value of Z Limited on the basis of replacement cost is 739. Market value of Z Limited on the basis of sales is 854, and market value of Z Limited on the basis of PAT is 700. So I got multiple market values, and these multiple market values, now I do the averaging. 2907 divided by 4, because equal weightage has been assigned. Equal weightage has been assigned. So 2907 divided by 4, you get 726.69. Say for example rupees 727. So market value of Z Limited will be approximately rupees 727. That is the answer. So this is called comparable company approach. क्या किया हमने? Two companies we have selected for comparison, X Limited and Y Limited. Step number 1. Step number 2, performance indicators we identified: book value, replacement value, sales and PAT. Step number 3, found out market value versus that performance indicator ratio, MVBV, MV replacement cost, ऐसे ratio find out करो X and Y. Step number 4, take the average of each ratio across the company. Take the average of each ratio across the company. Average of each ratio across the company. So X and Y ka average of an NBBB is 1.23. And now you get these averages, average indicators. You apply means multiply to the corresponding absolute figures of company in question, that is Z Limited. And that is how you get multiple market values of Z Limited. Now you find out what is the weighted average. Weighted average here is simple average because nothing is given, so divided by 3, you get average value of shares of Z Limited, which is 727. This is 5-step or 6-step model which is used for comparable company approach. Yeah. Any doubt you have, you can ask me. Is my screen visible to all of you? Yes, Tanmay? My screen is visible to the participants?
Yes, sir. Yes, sir. Yes, sir.
Yeah, it is visible. Okay. So any doubt? I have seen there are no questions. From time to time, I'm looking at the questions also. On this problem, if there are any questions, do write. Yeah. Comparable company approach. This approach is called comparable company approach. You'll find it in the module. Vinaya, you will find out this in the module. It is also called relative valuation method. All right. Okay. Okay, Vinaya, thank you. Such kind of question, if it comes in the exam, yes, students will pounce on it because there is no discounting at all, which is required to be done, right? So now we move to the next method, and that is using DCF technique. DCF technique means we make use of number 1, FCFE, FCFF, or dividend discounting model. So let's take one question on application of both dividend discounting model. This is illustration number 1. I'm reading out this question. Now it's like a caselet or a case study, and you have to understand step by step. Before we go through the case, free cash flow to equity, you can make notings. Free cash flow to equity, the starting point is PAT. I will give you the structure or the way in which you should carry on with the approach of this FCFE or FCFF. The starting point in case of FCFE, free cash flow to equity approach, is PAT. Whereas starting point under FCFF model is no PAT, net operating profit after tax. All are matured enough to understand difference between PAT and no PAT. PAT is profit after tax, no PAT is net operating profit after tax, which is EBIT into 1 minus T. EBIT into 1 minus T. You have profit before interest and before tax, what is called EBIT. I am not reading this exercise, so I am not on this problem at all. I am giving you an overview. So please listen carefully to each and every word what I am speaking. There is something called profit before interest and tax, what is called EBIT. There is something called profit after interest after tax, what is called PAT, 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 profit after tax, after interest, after all expenses. But there is some profit in between, which is profit before interest and after tax. सर ये क्या बात कर रहे हो? हाँ यही बात कर रहा हूँ, प्रॉफिट बिफोर इंटरेस्ट एंड आफ्टर टैक्स. आपने प्रॉफिट बिफोर इंटरेस्ट बिफोर टैक्स सुना है, प्रॉफिट आफ्टर इंटरेस्ट आफ्टर टैक्स सुना है. ये तीसरा वाया मीडिया इन बिटवीन कैटेगरी है. प्रॉफिट बिफोर इंटरेस्ट आफ्टर टैक्स, profit before interest after tax, profit before interest after tax, that is called NOPAT, 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 net operating profit after tax, which is EBIT into 1 minus T. All of you are aware that interest on date is a tax deductible expenditure. Interest on date is a tax deductible expenditure. Higher the interest, lower the tax. Higher the interest, lower the tax, obviously, because higher the interest, lower the profit, lower the profit, lower the tax. So there is a tax saving. Lower the interest. Is slide visible to all of you? From time to time I have to check. Slide is visible now to all of you?
Sir, yes, sir. Visible, sir.
Yes. Okay. No, because I get some message, that is why. Okay, fine, fair enough. First, we are not solving this problem, so don't pay attention to this. First, we are concentrating only on theoretical understanding, conceptual understanding on FCFE and FCFF model. I repeat, we have profit before interest and after tax. That means there is a tax deduction available on account of interest. And therefore, we always take into account profit which is before interest but after tax. Profit after tax because tax is a statutory liability, and before interest because of tax benefit on account of interest. So there is EBIT into 1 minus T, that is called NOPAT. T is the tax rate. So NOPAT, net operating profit after tax, is equal to EBIT into 1 minus T. That is what is NOPAT. So when we use FCFF method, FCFF, free cash flow to firm method, we make use of NOPAT. Whereas when we use FCFE method, we make use of PAT. This is point number one, the point of difference. We are learning points of difference between the two methods. So this is the first point of difference between FCFF and FCFE. FCFF, the starting point is NOPAT. NOPAT is sales minus operating expenses. That will give you EBIT. EBIT into 1 minus T will give you NOPAT. So the starting point for doing the valuation or forecasting of the future cash flow is NOPAT in FCFF model, because it is free cash flow to firm. Firm is concerned with profit before interest, right? While doing the performance appraisal of a business manager also, we take into account profit earned by that division before interest, because interest is a financing cost, is a financial cost, and therefore outside the purview of the divisional manager. Interest is outside the purview of divisional manager, and therefore during performance appraisal we don't take into account interest. We always consider profit before interest. So from firm's point of view, it is always profit before interest. You would have seen even in ROI formula also, return on investment, we take profit before interest, right? Always. So it is EBIT into 1 minus T that will give you NOPAT for the purpose of FCFF, free cash flow to firm. But free cash flow to equity, FCFE model, we take PAT, profit after tax, because it is net profit available to equity shareholders. Profit available to equity shareholders, that is profit after tax. And therefore for free cash flow to equity, FCFE, we make use of PAT. This is the first point of difference. Second point of difference, discounting is done under FCFF method by applying WACC. WACC is KO, overall cost of capital. We discount the future cash flows to present value by applying KO. KO is overall cost of capital or weighted average cost of capital. KO, overall cost of capital or weighted average cost of capital. And while using FCFE, we discount the future cash flows to present value by applying KE, cost of equity, like to like. We have to do like to like operation. If we are discounting future cash flow to firm, then KO. If we are discounting future cash flow to equity, then KE. And therefore by discounting this, what answer you get under FCFF is value of business. Whereas in FCFE, the value answer what you get is value of equity. To this value of equity, you have to add value of debt to get value of business. To this value of equity, you have to add value of debt to get value of business. So FCFE, or the derived answer, the calculated figure is value of equity. But in FCFF, the calculated derived answer is value of business, because you are at a gross level. In FCFE, you are at a net level. I hope all of you understand this difference between FCFF and FCFE method of valuation of business. Both are DCF techniques. They make use of concept of time value of money, and therefore both are equally important. But results would be different. Results may not be same. So if you are applying FCFF method and finding out the value of the firm, that may not tally exactly with the method used as FCFE. So both the methods may give the different answers, but of course, because of certain factors, certain reasons, and therefore we look at the valuation range. Always as an analyst, financial analyst, or as a consultant, when we are a business consultant, management consultant for mergers, acquisition, and when we are doing this valuation exercise, at that time we determine the valuation range. We don't go by the exact value 727, 729. as an academic purpose के लिए ठीक है, for getting the answer in the exam, yes, we do calculate this value exactly in precise term for exam answer, for exam purpose. But in real life, the valuation is based on valuation range. We determine the valuation range, and most of the time the negotiations, the discussions which take place with the other party, they are based on this valuation range. That's a practical approach I have given you. So this is what is FCFF and FCFE model. Now there is dividend discounting model also, I have told you, which is D1 upon KE minus G. Those who are attending physically live class here right now, not through YouTube, but right now they are listening, they can always write down also simultaneously. And that is P0, intrinsic value of a share, is equal to D1, expected dividend, D1 at the end of the year, upon KE minus G, cost of equity minus growth. I repeat, P0, intrinsic value of a share. P0 is intrinsic value of a share. That is equal to D1, expected dividend, upon KE minus G. Expected dividend is D0 into 1 plus G. Expected dividend is D0, that is current dividend or past dividend, into 1 plus G, growth rate, upon KE minus G. So in the next problem, we are going to make use of dividend discounting model, FCFE model, and then explain, understand, or ascertain the difference between the two values, two models, and which one would be used as a benchmark to compare with the market price. See, ultimately all this exercise of calculating the value of business or value of equity share is mainly to compare this value, intrinsic value, with the market value of equity. Shares are listed on the stock exchange, and therefore what is the prevailing price of the share on the stock exchange, market value of the share on the stock exchange. We are comparing this, and for comparative analysis, for comparison of that, where is this intrinsic value or worth of the share vis-a-vis market value. Accordingly, we can ascertain that yes, share is undervalued, share is overvalued, and accordingly we can take the decision, business decision. So therefore we have to compare the two methods, dividend discounting model and FCFE model, and you have to explain the reason that why there is a difference, number one, and which method can be used as a benchmark to compare with the market value or market price. Now friends, every time when you are answering the third part of the question, one minute, is my screen visible?
Visible, sir.
Okay. No, because the message I get is screen share is now paused. Why do I get this message? I don't know. Screen share is paused. ऐसा message है तुम्हारा. Okay. Screen is visible. No, I will read this problem then. Exercise 1. Novelty, a consumer durable manufacturer, reported earning per share of rupees 3.20 in 2005 and paid dividend per share of rupees 1.70 in that year. The firm reported depreciation of rupees 350 lakh in 2005 and capital expenditure of rupees 475 lakhs. There were 160 lakh outstanding shares traded at rupees 51 per share. The ratio of capital expenditure to depreciation is expected to be maintained in the long term. That means whatever increase in capex is capital expenditure, is offset by increase in depreciation. जितना capital expenditure बढ़ता है उतना depreciation भी बढ़ता है, and therefore the effect is nullified. The ratio of capex to depreciation is maintained in the long term. That means there is nil effect of increase in capex and increase in depreciation. That is the meaning. Working capital needs are negligible. Novelty had a debt outstanding of rupees 1600 lakh and intends to maintain its current financing mix of debt and equity to finance the future investment needs. So these are all lengthy caselet driven questions. This is an exercise in the form of a case scenario. It is a case scenario or a caselet, right? And you have to work out the value of the share using different methods. So you have a debt outstanding rupees 1600 lakhs and you want to maintain the same mix of debt and equity. Firm is in the steady state and earnings are expected to grow at 7% per annum. So G is given as 7%. Stock had a beta of 1.05. Treasury bill rate is 6.25. All of you understand why this T-bill rate is given. T-bill rate is RF, risk-free rate of return. Risk-free rate of return RF. So you are required to use CAPM, capital asset pricing model, to find out cost of equity. And the market premium is 5.5%. Market premium is RM minus RF. RM minus RF. Market rate of return minus risk-free rate of return. Market rate of return minus risk-free rate of return is called risk premium or market premium. So that is given as 5.5. All of you know formula to find out KE, cost of equity. Cost of equity is RF plus beta into RM minus RF. RF plus beta into RM minus RF. RF is given as 6.25, that is a T-bill rate, plus beta is given at 1.05 into bracket market premium is given, that means RM minus RF जो है उसको बोलता है market premium or risk premium 5.5. You get the KE, cost of equity, using CAPM. So at least you can prepare this working note of calculating cost of equity using CAPM. Even if entire answer goes wrong, at least for working note you get 1 mark or 2 marks as the case may be. So don't give up, don't surrender. That is what is my simple request to all of you. Even if the problem looks little complicated, lengthy, time consuming, one gets a feel that no, I don't know whether I'll be able to do this exercise or not. At least you understand that cost of equity you have to find out. So using CAPM, that is a simple thing based on what you learned in intermediate. So you can work out KE, uska 1 या 2 mark definitely आपको मिलेंगे. What are the 3 things required to be done? Estimate the value per share using dividend discounting model. Question 1, dividend discounting model, that is D1 upon KE minus G. Question 2, estimate the value per share using FCFE model. And question 3, how would you explain the difference between the 2 models and which one would you use as a benchmark to compare with the market price? Now answer to this third question is stereotype and standardize, and that is anytime we use DCF model, that is free cash flow to equity model or free cash flow to firm model. So FCFE or FCFF, any of these approaches we use for calculating value of the firm, that is always better than, more desirable, preferred to any other method, that is dividend discounting model. So between the two, which is more reliable? Of course, the answer is standardized FCFE model, FCFF model, and so on. So even if first and second part you don't get, third part you can write that value of the share is more reliable if it is calculated on the basis of DCF technique, particularly FCFF and FCFE, and not dividend discounting model. Yeah, like that you can give your, and that is reflected in the see, value which is reflected in dividend discounting model is based on dividend declared, whereas free cash flow is cash generated from business. How much cash flow a business organization had generated from business, that will be reflected in the value of business. What is the potential income generating ability of the firm? Potential income generating ability of the firm. What is the potential income generating ability of the firm will determine the market value, will be reflected in its market value. And therefore, in all fairness, FCFE model, FCFF model is more reliable than dividend discounting model. So this is a standardized stereotype approach Every time when the question is asked which model is better, always FCFF or FCFE is better, because cash earned from business operations during the year, cash earned from business operations during the year, that is cash flow of the year, is reflected income generating ability of the company in future. Potential income generating ability of the firm is reflected in its market price, and therefore FCFE or FCFF in all fairness is more desirable, more preferred method or approach to valuation than any other method. This is answer to part 3 I have already given. So part 1 and part 2, now you have to calculate dividend discounting model and FCFE. You are given information about past earning EPS, past DPS, earning per share is 3.20, DPS is 1.7, and so on. Depreciation is given, capital expenditure is given. Please understand, when you are calculating FCFE, you make use of profit after tax, all right, but equity finance portion of capex, equity finance portion of WC, you will have to eliminate. I repeat, we always work out what is the future cash flow based on what is financed by equity. We are finding out free cash flow to equity. So equity financed portion of capex. So 1 minus debt financing. Remember this. Equity financing financed portion of capex means 1 minus debt financing portion. Equity finance portion of capex means capex is funded partly through equity and partly through debt. You know that कोई भी कंपनी को कैपेक्स में इन्वेस्ट करना है, 1000 crores में इन्वेस्ट करना है, 700 crores may come out of debt, 300 crores may come out of equity. Any business, any project is funded partly through equity and partly through debt. So you have debt equity mix in any project, and therefore when you are using FCFE model, it is equity financed portion of capex. Equity finance portion of capex. How much capex is funded, is financed by equity financing, by equity shareholders. That is 1 minus debt financing. If debt financing is 30%, equity financing is 70%. So whether it is capex or capex minus depreciation, everything we multiply by 1 minus debt financing. 1 minus debt financing is equity finance portion of capex. Remember this. Yeah. Meanwhile, when you are solving this sum, I will look at some of the questions asked by you, if any, in the chat box. Yeah, Sumadhura is asking the question, sir, in the problem number 3 from this slide, what is the comment we give? All right, I'll respond to you. Yes, sir. Yes, sir. Yes, sir. All this, yes, sir. Okay, sir. Visible. Yeah. Oh, sir. This is response to my question you have said. Okay, I'll reply to you, Sumadhura. This is what comment do we give in question in problem number 3. Yeah, problem number 3. I'll give you the comment. In problem number 3, the question was calculate value of the firm, value of Z Limited. So comment का कोई सवाल ही नहीं है सुमधुरा. Question comment का कुछ सवाल ही नहीं है. सब comment कहाँ पूछा है? Question में लिखा है value the firm, value Z Limited. So we valued Z Limited and that is 727. We valued Z Limited, that is 727. Yeah, do you understand, Sumadhura? You understand which problem 3 are same from? Yes, sir. No, there is no question. We are just using comparable company approach. Okay, thank you. Okay, coming back to this question number 1, exercise 1, what we are doing. So you have to make use of capital asset pricing model to find out FCFE. I'll show you the approach. Since we have limited time, I will show you the approach. See, the data given is written like this. EPS is written, DPS is written from the question. Depreciation likha hai, capex, number of shares, market price per share. All this data given is tabulated. See what happens now. My request to all of you is, when you have a question, a case scenario in narrative form, when you have a case scenario in narrative form, in paragraph form, just crystallize, condense all these readings into the numbers. Ultimately, as finance students, we are interested in numbers. We are not interested in anything else. So jot down the numbers key numbers, key figures which are you are going to use from this case scenario, from this caselet in your answer paper. जैसे मैंने अभी किया है, आपने देखा सॉल्यूशन में मैंने जॉट डाउन किया है, ईपीएस इतना है, डीपीएस, डेप्रिसिएशन, कैपेक्स, नंबर ऑफ शेयर्स, जो जो डेटा क्वेश्चन में दिया है वो मैंने उतारा है, बस उतना ही मैंने किया, बाकी कुछ नहीं किया. So that you have to do so that your thoughts are focused. Otherwise, when you are running through the paragraphs again and again, chances are there ऊपर नीचे figure eyesight. Ultimately, we are under exam pressure. There is a lot of anxiety, and ऐसे unknowingly भी हो सकता है that we may see figure of the second para when I am applying to the data of the third para. That means so depreciation की फिगर 350 है, लेकिन कैलकुलेट करने के टाइम मैं कैपिटल एक्सपेंडिचर की फिगर कंसीडर कर सकता हूँ 475 बाय मिस्टेक, अननोइंगली, पर्पसली कोई नहीं करेगा. So it is better that whatever data given in the case study or that case scenario you jot down in terms of numbers or figures in your answer paper, so your thoughts are focused and structured. Now I know that I have to make use of only this data. अभी मुझे केस स्टडी की तरफ देखना ही नहीं है, केस स्टडी का पूरा डेटा मैंने उतारा है. Yeah. Now first is working note 1 on cost of equity using CAPM. इधर मैंने लिखा नहीं है, but you understand using CAPM. एक एक चीज जो आपके मन में आता है, you have to write on the answer paper. Please understand that you do not know the breakup of marks. So whatever thoughts are in your mind, loose thoughts, stray thoughts, weird thoughts, जो मन में विचार आते हैं, loose thoughts, stray thoughts, weird thoughts, जो मन में विचार आते हैं, कागज पे उतारो. Because the person who is checking your paper is not peeping into your mind. आपके मन में क्या चल रहा है वो पेपर चेक करने वाले को कैसे पता चलेगा आपके मन में क्या चल रहा है. सो सब मन की जो बात है ना वो कागज पे उतारो. Each and every thought of your mind, document it, put it on paper. Yeah, you, when the person who is checking the paper, the valuer, the examiner will pick up, you know, whatever, the examiners are all trained, so they know how to pick up the pearls out of the garbage. Remember my words, how to pick up the pearls out of garbage. Garbage means all many answer papers with dirty handwriting, very shabby presentation, but how to pick up the pearls out of garbage, eyesight is set. And therefore don't bother about the examiner, don't bother about the valuer. Valuer will do his or her job, but you document each and everything. So cost of equity लिख के मैं खत्म नहीं करूंगा. I will write into bracket according to CAPM. ये मैं बोलने वाला कौन होता हूँ, ये फॉर्मूला मैंने थोड़ी डिजाइन किया है. RF plus beta into RM minus RF. I am not the creator of this formula. This formula is designed as per CAPM. So into bracket do write according to CAPM, capital asset pricing model. 6.25 plus 1.05 into 5.5. Bear in mind RM minus RF is called margin, and that is what is premium, risk premium. RM is market rate of return, risk-free rate of return is RF. RM minus RF is risk premium, market premium, that is 5.5. So 6.25 plus 1.05 into 5.5 will give you 12.025. That is cost of equity. देखो cost of equity is 12.025. Odd आया, don't round it off to 12.03. What happens is if figures are in lakhs of rupees, your answer may not vitiate to a large extent. But if your figures are in small digit, then answer may get disturbed. Lakhs of rupees may few thousands here and there, you can say rounding of difference. Rounding of difference, you can say if it is few thousands here and there in a lakhs of rupees answer. But if the answer itself, like in that question number 3, is 727, 727 की जगह if I get the answer 737, that is not fair, no? 727 and 737 में फर्क है, so I cannot say it is a rounding of difference. So better, why to give chance for anyone to comment on our answer? Better you keep the decimals as it is, 12.025. Don't round it off to 12.03. You will apply as it is. Only the final answer what you get, you have developed the habit of rounding off only the final answer. एकदम final answer. जो final answer आएगा ना उसको round off करो. बाकी intermediate calculations don't round off. Do not round off intermediate calculations. Otherwise उसका असर final answer पे पड़ सकता है. And if figures are in lakhs and crores, ये असर ज्यादा नहीं रहेगा. But if figures are in thousand, the impact will be visible. And this is a general rule, a thumb rule I am telling you. Please do not round off at the intermediate stage. Round off at the end, towards the end. So 12.025 is the cost of equity. Now I apply dividend discounting model. So dividend discounting model, I told you the formula D1 upon KE minus G. D1 upon KE minus G. D1 is nothing but D0 into 1 plus G. Past dividend is 1.7 into 1 plus G. Growth rate is also 7%. Divided by KE minus G. KE is 12.025. 12.025 है, 12.25 नहीं है. So don't commit mistake of picking up wrong number. It is not 12.25. It is 12.025 minus G 7%. And in the denominator there is percentage. जरा calculator पे करके देखो whether this expression gives you the answer 36.199. Just check whether you are getting the answer 36.199, which is equal to rupees 36.20 approximately. Rupees 36.20 approximately. That is value of equity. जरा मैं 2 मिनट रुकता हूँ. Just check whether you are getting this 36.20 value of equity using dividend discounting model. I will wait for you to calculate these figures on the calculator. Denominator में percentage है, वो भूलना नहीं. There is percentage in the denominator. Okay, so all of you got 37. Yeah, please confirm all of you got 37. Yes, 36.20 Vinaya, correct. That is 36.20. Thank you. Some students are really very active. I like this because you are taking keen interest, active interest, and that is good. So 36.20 approximately. See, I have written value of equity is 36.20 approximately. Now let's go to the next slide where I have solved the say using second method. This is method A, dividend discounting model. Now let us solve using another approach, and that is FCFE model. Please take down the formula for this. FCFE is equal to net income. Net income is PAT minus, all of you know that you first convert book profit into cash profit. How do you convert book profit into cash profit? By adding back depreciation, adding back non-cash expenditure. Non-cash expenditure is depreciation. You have to add back. Yeah. And capital expenditure, delta capex, that means change in capex, change in working capital during the year, you have to deduct, because that will reduce your cash flow. So I repeat, net income, we add back depreciation and reduce delta capex, change in capex and change in working capital. So that change in capex and change in working capital and depreciation effect I have merged together. So you can see net income minus into bracket capex minus depreciation. Capex minus, so if you open this bracket, capex becomes minus and minus minus plus, so depreciation becomes plus. So net income minus capex plus depreciation. FCFE कैसे आ गया? Net income minus capex plus depreciation. So depreciation added back is a non-cash expenditure and therefore added back. Capex you deducted because it is cash outflow, right? And this into bracket you multiply this by 1 minus debt financing ratio. 1 minus debt financing ratio because equity financed portion of capex. Please understand, when you are using FCFE, it is equity financed portion of capex. Equity financed portion of capex. So 1 minus debt financing ratio, you will multiply. Don't forget to multiply by 1 minus debt financing ratio. And my dear students, debt financing ratio is not same as debt equity ratio. I don't have to tell you this. Debt financing ratio is debt upon debt plus equity. I repeat, debt financing is debt upon debt plus equity. That is given over here. Debt financing ratio is debt upon debt plus equity. So debt is 1600 and equity is 8160. 8160 कैसे आया equity? Number of equity shares multiplied by market price per share. करो calculator पे. Number of equity shares which is given 160 outstanding shares. 160 lakh outstanding shares traded at rupees 51 per share. 160 lakh into 51. 160 lakh outstanding shares traded at rupees 51 per share. So 160 into 51. You get the answer 8160. 160 into 51, 8160. That is the equity component. So date component is 1600 upon 1600 plus 8160. You get date financing ratio as 16.39. 16.39. Yeah, that is what you get. 16.39. That is date financing ratio. When you are working out FCFE, the formula or the approach is net income minus capex minus depreciation in one bracket into bracket 1 minus date financing ratio minus change in working capital into bracket 1 minus date financing ratio. So you have FCFE is equal to net income is EPS 3.2 minus you have to calculate what is depreciation per share and capital expenditure per share. So 350 lakhs upon 160 lakhs. That is 160 lakh is number of outstanding shares. So 2.1875 is depreciation per share. Capital expenditure per share is 2.968. So you have depreciation per share, you have capex per share. So capex minus depreciation 2.968 minus depreciation 2.187. My into 1 minus debt financing 16.39. That will give you FCFE. I want all of you to cross check these figures and confirm to me in the chat box in the questions that you are getting the correct answer what I have derived. So you get 2.5474 as FCFE. Now this FCFE you are to discount to present value by it's only for 1 year. So FCFE multiplied by growth rate. This is past FCFE, free cash flow to equity into growth rate 7% 1.07 upon KE 12.025. What we worked out minus G growth rate to get the answer 54.24. That is value of the share using FCFE. I want all of you to do this calculation, cross check each of these calculation. I will wait for 2 minutes or so and confirm to me in the chat box. Confirm to me in the chat box, in the question box, do confirm to me that you got these answers 54.24 in this using FCFE. Any question relating to the approach or the method you can ask me. Yes. Please solve it and I want you to, yes, Sumadura is also doing, Vinay also is doing, so please get me the answer. I'm waiting for your confirmation. How is 2.968 is arrived at? Capital expenditure per share. Vinaya, that is capital expenditure per share. 2.968. Why we have converted? Because like to like. That is what. So this is the second question on FCFE and dividend discounting model. And we said FCFE is greater than dividend paid. See, as per dividend discounting model, our answer came to, we arrived at now the earlier slide. 1 minute. We arrived at the earlier slide. Value of share is 36.20. 36.20 is using dividend discounting model, and using FCFE model it comes to 54.24. So using FCFE we get more value, higher value of the share, and FCFE is greater than dividend paid. Higher value from the model reflects, look at the comment which I have given. Higher value from the model reflects the additional value from cash accumulated in the firm. Why there is higher value in FCFE? Because that indicates cash generated from business operations is higher, right? Higher value is reflected additional value from cash accumulated in the firm. FCFE is a more suitable method because it is more realistic model. FCFE is more suitable model because it is more realistic model. That is what is the answer. More realistic, more reliable because it throws light on income generating ability of the firm. I told you potential, you can write over here. I have not given, but you can write, I'm dictating that FCFE model indicates cash flow generated from business. FCFE model indicates cash flow generated from business available to equity shareholders. Cash flow generated from business as available to equity shareholders. FCFE model indicates cash flow generated from business as it is available to equity shareholders. As it is available to equity shareholders. Thus, it throws light on potential income generating ability of the firm. Thus, it throws light on potential income generating ability of the firm. It throws light on potential income generating ability of the firm. Potential income generating ability of the firm. I hope all of you have understood. In the process, three methods. To summarize, we have covered three methods of valuation so far. One is relative valuation approach, comparable company approach or relative valuation method, one and the same. Comparable company approach or relative valuation method. Second is dividend discounting model, and third one is FCFE, free cash flow to equity. All three methods we have covered. So now we go to fourth method, that is FCFF. But before that, if you have any questions, you can ask. Yes. Sumadura is writing FCFE is 2.5475. Yeah, I also got same, no, Sumadura? 2.5475. How much did I get? FCFE. Sorry. 2.5475. Yeah, 7475. That is all right. All right, Sumadura. Even if it is 2.5474 ki jagah 75 hi hoga, chalega. To that extent, very small variation in the fourth decimal, that is all right. It will not vitiate your answer to a large extent. Don't worry about that. Shall I move to the next method? And that is FCFF method, right? So let's solve one question on FCFF. What is FCFF? I told you free cash flow to firm, and that is free cash flow to firm is nothing but our starting point remains the same. We start with sales minus operating cost including depreciation. Depreciation is also a part of operating cost. So sales minus operating cost including depreciation, you will get EBIT, earning before interest and tax. EBIT into 1 minus T will give you NOPAT. EBIT into 1 minus T will give you NOPAT. To this NOPAT, this is the net operating profit after tax, and starting point is NOPAT. I told you in FCFF model, starting point is NOPAT. To this NOPAT, you will add non-cash expenses like depreciation. So add depreciation. NOPAT is converted to CFAT. CFAT is cash flow after tax. NOPAT is net operating profit after tax. Add depreciation, you get CFAT, cash flow after tax. A cash flow after tax, what you arrived at is not cash flow from this is only cash flow from operations, but before adjusting for working capital. So now you have to keep aside some margin towards some amount towards capex, some amount towards WC, and therefore you will say minus delta capex minus delta WC, minus delta capex minus delta WC. Delta means change during the year. What is capital expenditure during the year? So opening balance in fixed assets account at the beginning of the year, closing balance in FA account at the end of the year. The difference between the two is nothing but additions during the year or sale during the year. You know the accounting, basic accounting. So what is the change in capex during the year? Delta capex bolte hai. What is change in capex during the year? Delta capex. That you will subtract, because to that extent management has to keep aside the funds earmarked for capital expenditure for future expansion. Also management has to earmark separate funds for working capital. So minus delta WC, day-to-day running of business, smooth running of business is required, and therefore separate funds have to be kept aside. So there is delta capex, delta WC, which is subtracted. Now what you get is CFAT, cash flow after tax from operations. Abhi non-operating activity add karna baki hai. There is cash flow are earned also out of non-operating activities. In cash flow statement accounting standard 3 earlier, you have studied in intermediate that cash flow from operations and other activities like financing and investing. So if there is interest received, dividend received, that is not part of cash flow from operations. It is separate. So to that cash flow from operations, you have to add dividend received, interest received. So any other cash flow earned by the business out of non-operating activities like financing or investing activities, and that is post-tax. So interest received post-tax, dividend received post-tax, whatever, all that you will have to add. Now you get cash flow from operations, CFO, which is ready for discounting. Cash flow from operations, which is ready for discounting. I repeat the flow. This is the flow or approach to be used for FCFF, free cash flow to firm. Now repeat this approach. Start with sales. Sales minus operating cost. Operating cost will include depreciation. Sales minus operating cost. Operating cost is normal operating expenditure plus depreciation. Depreciation is a part of operating cost. So sales minus OPEX. OPEX means operating expenditure including depreciation. You get EBIT. EBIT, you have to convert it into NOPAT. How will you do that? EBIT into 1 minus T will give you NOPAT. NOPAT is not the base. You have to convert it into cash flow. So add back depreciation. NOPAT plus depreciation is CFAT, cash flow after tax. NOPAT is net operating profit after tax. Add back depreciation, you get CFAT, cash flow after tax. From this cash flow after tax, you deduct delta capex and delta WC. You get cash flow from operations, CFO, cash flow from operations. But now you have to find out cash flow from business. So add non-operating activities cash flow. So cash flow from investing activity, cash flow from financing activity, you add back post-tax and you get total cash flow from operations. This is the basis for discounting. Cash flow from operations and non-operating activities is the basis for discounting. This cash flow you will discount to present value. Now this is a standardized kind of a path, a routine path, a standardized path what we use for calculating free cash flow to firm. Now we will solve one question on free cash flow to firm. I'm reading it out. It is in front of you. Exercise number 4. Yeah, just see whether it is visible to you. Exercise number 4. Meanwhile, I will see if there are any questions. Now 54.24 Vinaya is giving the answer. That is okay. You got 54.24. Have you all understood 3 methods? Purvi, Vinaya, Sumadhara, Arya. Have you all understood these methods what I discussed? So far 3 methods हमारे हो गए और चौथा भी मैंने FCFF discuss किया. I explained 4 methods already. Which are the 4 methods? Dividend discounting model, FCFE, then comparable company approach, and now FCFF I have discussed. FCFF I have discussed. FCFF is little difficult. Yeah, Vinay, I know that FCFF is difficult. Difficult means till the time you do it, it is difficult. एक बार आपने एक problem कर लिया Vinay, so there is no problem. You will be able to get that confidence. Now, because it is stereotype, it is standardized. That is what I am saying. It is very standardized approach. Following details are available. Look at this exercise, exercise number 4. Following details are available regarding projected operations of Pragati Enterprise. Such type of questions have been asked in the past in the exam and they will continue to be asked. So they are generally, these kind of questions are lengthy, carrying 15 to 16 marks. Now it is 10 marks weightage. 10 marks weightage. और पूरा इसके साथ कोई भी थियरी क्वेश्चन अटैच नहीं है, कोई भी सब पार्ट अटैच नहीं है, बस one question of 10, 15, 16 marks is enough actually, right, to test the knowledge of the students in all respects. It's a lengthy question. Of course, in limited time, I don't expect you to do this yourself, but at least pay attention to the approach. Yeah, you can take a peek also in case you are sitting on the laptop or a desktop and you can have a look at the major screen. You can quickly take a peek of this data. Because subsequent slide the data is given in narrative form And when data is given in narrative form, I told you in the first caselet that you have to go on underlining the key figures, jot down those key figures, condense the figures so that you are structured in your approach, right? Because data is given in loose, in scattered manner, then chances of making mistake. When data is given in loose form, in scattered form, chances of making mistake. And therefore, it is better that you write down those figures which are given in paragraph. Yeah? Read the figure, read the data. Following details are available with regard to projected operations of Pragati Enterprise. For 5 years, you are given the data, sales, operating expenses, depreciation. So obviously from sales, you have to deduct operating expenses and depreciation. You are given for 5 years investment in net current assets at the beginning of the year. That means delta working capital, change in working capital. Investment in working capital means delta working capital. Investment in fixed assets means delta fixed assets. Change in FA, change in working capital. So investment in fixed assets is given 30, 20, 10, 0, 0. Yeah. Then year 1, 3, and 5, you will find year 1, 3, and 5. There is non-recurring expenditure which has taken place. Non-recurring expenditure in year 1, 3, and 5. 1 minute. That is 12, 8, and I think 20. That name has come in this. 12, 10, and 22. This is non-recurring expenditure. 12, 8, and 22. That is what is post-tax non-operating cash flow, non-recurring non-operating cash flow from investing and financing activity. I require all these figures for my template. There is a template, there is a standard format in which you have to approach any question on FCFF. So now it is given in paragraph, in narrative form. Now I have to crystallize and condense it to the bullet points, to the key figures. The company has long-term debt carrying an interest rate of 12.5%. Interest rate of 12.5% means KD is 12.5. KD is 12.5. It has some non-interest bearing current liabilities that you ignore. Cost of equity is 16%. Company does not have any other long-term source of finance. The market value of equity is 50 lakhs. Market value of debt is 30 lakhs. Effective tax rate applicable to the company is 36%. From the 6th year onwards, the free cash flow of the company is expected to grow at the rate of 8% per annum. So growth rate is given as 8%. You are given market value of equity, market value of debt. Obviously, you will use these values for calculating WACC, weighted average cost of capital. KD is given, KE is given. So you can write down KD is equal to 12.5. See, ये जो paragraph में data दिया है, you have to convert this data in the structured manner, in the form of numbers, in the form of key figures. I have been repeating this whenever the data is given in the case study in the paragraph form, in the narrative form. You have to convert that data in a condensed manner, that is in a capsule form, in the form of key variables which are required. So KD is 12.5, KE is 16%, MV of equity, market value 50 lakh, MV of debt 30 lakh, and tax rate is 36%. So you have to make use of all this data and find out what is weighted average cost of capital WACC, and growth rate is given as 8%. What is the question? You are required to calculate the value of the company using discounted cash flow approach. Discounted cash flow approach is DCF approach. You have to make use of these data to find out value of the firm, value of the company using discounted cash flow. So DCF approach में कौन से आते हैं? Dividend discounting model आता है. ये तो applicable नहीं होगा because dividend की कोई information, कोई भी जानकारी नहीं है. So dividend discounting model will not be applicable. Then which are the other two models? FCFE and FCFF. All fall under DCF technique, discounted cash flow technique. So obviously this data is in favor of, so you are given the data about sales and operating expense. That means our starting point is NOPAT, net operating profit after tax. So that means this is FCFF method. See, when the question is very vague, it is not given which method you should use. It only says that you have to solve this question or calculate the value of the firm using DCF technique, DCF, discounted cash flow technique. So question arises in the mind of the student, DCF में कौन सी method apply करूँ? Is it dividend discounting model, or is it FCFE, or is it FCFF? Obviously dividend discounting model ruled out because dividend की कोई जानकारी नहीं है. FCFE or FCFF में FCFF will prevail because the data is given about sales and operating expense, and therefore NOPAT is the starting point. That means FCFF model. Like that in your mind, the articulation should go on. Articulation. articulation should go on in your mind. मुझे कौन सी method use करनी है? FCFF. Now follow the template of FCFF. Sales minus operating expenses minus depreciation will give you NOPAT. No, will give you EBIT. Sales minus operating expense minus depreciation will give you EBIT. EBIT into 1 minus T will give you NOPAT. NOPAT, add back depreciation, you will get cash profit after tax, cash flow after tax. Then you have minus delta capex minus delta WC, you get profit cash flow from operations plus non-operating cash flow post-tax is cash flow from business. This is a standardized procedure, standardized template. So I will dictate this standardized template to you after some time. Meanwhile, try to understand this calculation step by step. I'm giving you 2 minutes to jot down these key figures and calculate WACC. एक बार WACC calculate करते हो तो मुझे बोलो. K, I'm waiting for your response in the chat box. KD is 12.5%. KE is 16%. Market value of equity 50 lakhs. Market value of debt 30 lakhs. Tax rate 36%. Growth rate 8%. ये पूरे पैराग्राफ का डेटा आपने उतारा आपके नोटबुक में या आंसर पेपर में. That's it. Now I will not keep on dancing from one slide to the other. I will keep this slide stable. This slide I'll keep this stable. Now you'll prepare 5 years forecast and 6th year is called terminal year. So terminal years figures also you can prepare, you can work out. But first calculate WACC and let me know. I'm waiting for your answer on WACC. Weighted average cost of capital. I'm waiting your answer on WACC. Okay. WACC का आंसर आ जाएगा तो मुझे पता चलेगा. KD post tax into market value of debt plus KE into market value of equity upon debt plus equity will give you overall cost of capital. मैं formula बताने की जरूरत है क्या? Because in intermediate also you have studied this in FM, in SFM also you have studied this. As per weighted average cost of capital formula, it is KD post tax into debt content, market value of debt plus KE into market value of equity divided by market value of debt plus equity. Pradeep Kale has worked out WACC as 13.8125. 13.8125. Let me wait for others to give me the answer and then cross check. Wait, give me 2 minutes for everyone to calculate. Pradeep, just wait for 2 minutes. Yes. I expect all of you to calculate this WACC, weighted average cost of capital. 13.08. Sumadhura got it 13.08. Pradeep got it 13.81. 13.08 and 13.81 डिफरेंस है ना प्रदीप एंड सुमधुरा? आप दोनों के आंसर में डिफरेंस है. Vinaya has calculated 10.4, altogether different. Surprising, हर एक का अलग अलग आंसर आ रहे हैं. 10.4. Okay, let's look at then. Yeah, let's look at this. I will show you the approach. Look at the approach. Calculation of cost of capital. किसी का भी सही नहीं आया. Calculation of cost of capital is in front of you in the screen. That is 13%. 13%. Cost of capital KO or weighted average cost of capital is 30 into 0.125 into 1 minus tax rate. Tax rate is 36%. Tax rate 36% दिया है. आपने वो consider किया ही नहीं. 1 minus T. 12.5 is KD. KD into 1 minus T. This is pre-tax. So assume this to be pre-tax if nothing is given. Into 1 minus T multiplied by market value of date 30 plus market value of equity 50 into KE 16% upon 30 plus 50 market value of date plus equity, you get 13%. Exactly 13%. Exactly 13%. That is cost of capital. Please confirm that you have understood this WACC calculations. Please confirm or ask questions if you are not understood. See, that's what I was telling you. If your WACC calculation is wrong, all subsequent calculations will go wrong. So have you understood, Pradeep, Sumadhura, Vinaya, those who calculated? Now understood? No, don't say sorry. Ultimately, you are here for learning and revising the concept. So no question of sorry. Yeah, I'm happy that you are taking so much keen interest. Yeah, Pradeep, I know you did not consider tax. That is why you got the answer. Sumadhura, Purvi. Sir, can you please repeat? Purvi is asking. Yes, I will definitely repeat, Purvi. Cost of capital is given as market value of date 30 into KD pre-tax. KD is given as 12.5. Calculator पे करके देखो. When you do it yourself and get the answer, then your belief is confirmed. Yes, your understanding is confirmed. So cost of capital is equal to market value of equity 30, market value of date 30 into KD 0.125. 12.5 means 0.125 into 1 minus T. Tax rate is 36% plus KE, cost of equity 16% into market value of equity 50 upon equity plus date 30 plus 50, and you get the answer 13%. So cost of capital comes to 13%, 13. That is what is WACC, 13%. Have you understood, Purvi? एक बार कैलकुलेटर पे करके देखो. मैं बोल रहा हूँ आप एक बार कैलकुलेटर पे करके देखो. Then you will understand. Okay, you did and you got it. Thank you, Purvi. Yeah, good. Now I go back to the template and work out all the required things. So this is how you will prepare the template. Here template है, समझो template means format, right? This is the format in which anytime the question is asked on FCFF or on DCF technique using FCFF, free cash flow to firm, then you have to use this format. We start with cells. You can see 120, 132, 145. These are projections. This is called cash flow for the explicit forecast period. देखो मैंने title क्या लिखा है. This is gross cash flow for explicit forecast period. Explicit period is 5 years. 5 years is the predetermined schedule, predetermined period. Explicit forecast period, that is 5 years. So we are working out cash flow for explicit forecast period. So sales minus operating expenses minus depreciation, you will get EBIT. So 120 में से deduct करो, minus 53 minus 11, you get 56. That is EBIT, right? EBIT into 1 minus T करोगे तो you get NOPAT. NOPAT को NOPLAT भी बोल सकते हैं. NOPLAT is net operating profit left after tax. That L stands for left. Net operating profit left after tax. NOPLAT. EBIT into 1 minus T. Yeah, so 56 into 1 minus 36%, you get 35.8. Then you get 41, you get 46.7. Please confirm that you are getting these figures 51.2, 57.6, what I have highlighted. So this is notepad, and to this notepad you add depreciation. See F plus C, F is notepad, and इसमें depreciation C add किया 11, 35.8 plus 11, you get 46.8, 41 plus 10, 51, and so on. So you get gross cash flow, which is F plus C. So that is cash flow. Minus we have to deduct the investment in capex and investment in WC. So investment in WC is 65675 and investment in capex is 30 20 10 0. ये मैंने question से उतारा. So total investment is 6 plus 30 36, 5 plus 20 25, 6 plus 10 16, and so on. So this is total investment. So ये जो investment figure है आपको nopads आपको gross cash flow से deduct करना है. ग्रॉस कैश फ्लो क्या है? नोपैड प्लस डेप्रिसिएशन. सो ये जो लास्ट लाइन आपने वर्कआउट किया 46.8, 51, 56.7, उसमें से आपको ग्रॉस इन्वेस्टमेंट डिडक्ट करना है, right? And then you get gross cash flow minus gross investment is obviously cash flow after tax. What you get? Cash flow after tax. But that we will do in the next page, next slide. Meanwhile, please confirm. I will wait for 2 minutes for everyone's confirmation. ये जो मैंने calculation किया है 5 साल का, whether this is understood by all of you. How will you know? By calculating the figures yourself. So मैंने जो sheet पे figure दिया है उसको वापस आप calculator पे calculate करके cross check करो. Please cross check whether I have done the calculations correctly or are there any mistakes, and have you understood these calculations? That is more important. A template is a standardized template. So I wait for you to confirm to me that these calculations you have done and they are correct. All right. I wait for your confirmation. Okay. Now let me see how many of you have got it. Yes, Purvi, Pradeep, Vaibhav, calculation correct, sir. Just second year is rounded off. Vaibhav is saying just second year is rounded off. Which second year you are talking about? All right, that is 41 is rounded off. All right, you can take it absolute also, no problem. Yeah, no problem. Supriya, you have raised the hand for what reason? Or was it by mistake? Just for some second you had raised the hand, Supriya. Any doubt, Supriya, you have? Okay, Supriya. By mistake. Okay, sorry. So now you got gross cash flow, you got gross investment. Reduce this. Next slide. Now I am moving. So you can see the next slide. Gross cash flow minus gross investment, that will give you free cash flow from operations, FCFO. Free cash flow from operations, free cash flow from operations. Prior to this, what you got, you can always show this as CFAT, cash flow after tax. You can show it as CFAT after tax, cash flow after tax. See earlier slide, this what you got, cash flow after tax, gross cash flow minus gross investment is cash flow after tax. You have to title something, no? So that is free cash flow from operations. Non-operating cash flow, which is given, I have added, and I got free cash flow, not from operations but in general. So 22.8, 26, 48.7, 56.2 and 86.6. And now these cash flows, free cash flows, are discounted to present value. So present value of FCF is 22.8 divided by 1.13. Why 1.13? Because it is 13% is the WACC. So we are discounting at WACC. So divided by 1 upon 1 plus R. R is rate of return. Weighted average cost of capital is called rate of return. All of you are aware. So 1 plus 13% is 1.13. So that is why divided by 1.13 to the power n. N is number of years. So for first year it is 22.8 divided by 1.13 to the power 1. 26 plus 26 upon 1.13 square plus 48.7 upon 1.13 cube plus 56.2 upon 1.13 to the power 4 and so on. So you get the answer of present value of FCF as 155.76 lakhs. 155.76 lakhs. Just confirm that you are getting this. Calculator pe karo. Abhi this is subject to your 13% coming as correct. If your cost of capital 13% goes wrong, then obviously your present value of FCF will go wrong. Present value of FCF will go wrong. That's what I told you in the beginning of this lecture, beginning of this session, today's session, that these calculations are time consuming, lengthy. You have seen how much time we are doing these calculations after understanding. Half an hour to लगता ही है ऐसे sums को solve करने के लिए. And therefore this 13%, most of you got it wrong because some of you ignored tax, some of you applied wrong formula, whatever. But you got other than 13%. So your discounting of future cash flows also will go wrong. Final answer will go wrong. So don't do these mistakes and be careful at every stage, at every juncture. So please check all the above calculations, whether 46 minus 8 minus 36, whether you are getting 10.8 and so on. And then plus non-operating cash flow plus 12 plus 0, you get 22.8 and so on. Just confirm that you are getting all these figures. And then you discount these figures to the present value. I don't work out continuing value, that I will explain to you. खाली इधर तक workout करो, 155.76 तक workout करो, and confirm to me in the chat box that you have done this, so that I will also get a confirmation that you have understood and you are doing it. See, unless I told you no, just by looking at the approach or the method, you are not going to get the confidence. Looking at the approach or the method, you are not going to get the confidence. खाली I looked at it, oh wow, very good. ऐसे मुझे confidence नहीं आएगा. I have to solve it. I have to check the calculations on the calculator. मुझे खुद को कैलकुलेटर पे कैलकुलेशंस करना पड़ेगा, then only I will come to know yeah answer is correct. So 155.76 ये आ रहा है कि नहीं जरा कंफर्म करो. I will expect from every one of you. Now from everyone I will expect the answer. Yeah. So please confirm that the calculations, that's why I'm taking this pause. Please confirm that all these calculations are correct. Non-operating cash flow, how calculated, Vinaya? That is given in the question. Non-operating cash flow is given in the question. I will show the question once again. See the question. See, non-operating cash flow is given. Post-tax non-operating cash flow, 12, 8 and 22. 12, 8 and 22. It is given to you. Already it is given. So we have just copied the figure. 12, 8 and 22. Non-recurring cash flow. Non-recurring because it is not in every year. It is skipping 1 year and coming in the next year. Second year and fourth year it is not expected. But first, third and fifth year it is expected. Quite possible. I hope now you understand. Okay. All of you please check the calculation and confirm to me that you are getting 155.76. I cannot proceed unless you confirm that you are getting this 155.76 by discounting these future cash flows FCF to the present value. This is the method we are using, FCFF. We are using the method FCFF. Once you confirm that you are getting 155.76 by calculating all these workings, then only I can go to the next step, and that is continuing value. Yeah, Supriya has confirmed, Vaibhav, Pradeep, yeah, all are sincere students. 155.80, 81, 76. Yeah, ठीक है, all are correct. So 155.79 Supriya वो भी correct है, Vaibhav का भी 155.81 correct है. Pradeep, you are also right. Yes, Purvi, good. So that means by and large, every one of you is, I am assuming all others are also working, unless you know, just by putting the cords in the earphones in your ears and listening, you are not going to get the confidence. आपको खुद को मेहनत करनी पड़ेगी, calculation बार बार करना पड़ेगा, get that satisfaction and confirmation for all numerical subjects. Next is continuing value. So now how do you get continuing value? It is 86. Continuing value is also called terminal value. See, we have estimated the cash flows for 5 years, but every business concern is a going concern. All of you are aware. Every business firm is a going concern, and therefore these cash flows are going to be repeated in for n number of years, for uninterrupted n number of years, a perpetuity. And therefore we assume that these cash flows will be there till perpetuity, indefinite period of time. इसके लिए उसको बोलते हैं continuing value or terminal value. Terminal value or continuing value. So last year's free cash flow you will pick up 86.6 continuing value into growth rate. 8% is the growth rate into 1.08 divided by cost of capital 13%, 0.13 minus G, growth rate is 8%. So minus G, minus 8%. And denominator में percentage है, याद रखना. So you get continuing value as 1870.56. I want you to confirm to me that this figure is correct. 1870.56. This is called continuing value or terminal value. See, most of the value of the business is derived from its terminal value and not from the present value of FCF. Present value of FCF कितना छोटा था देखो, 155.76, बस इतना ही था present value of FCF. That was 155.76 present value of FCF. but continuing value is 1870.56. So a predominant portion of the value of the business is derived from its continuing value and not from free cash flows, not from present value of FCF. उससे 10 गुना से ज्यादा है, 155 10 times से ऊपर है 1870. So continuing value is 1870. I want you to confirm to me that you have understood this calculation. How do you get continuing value? It is FCF in the last year 86.6 into G, growth rate 1.08, upon KE minus G. KE is KO because it is FCFF. So KO minus G, 0.13 minus 0.08, and you get 1870.56. This is continuing value, but ये present value नहीं है, ये continuing value है. इसको convert करना है present value में, because then only we can add to 155.76. This is PV of FCF. PV of FCF इसमें add ये figure नहीं कर सकते 1870. इसको present value में convert करना पड़ेगा. But before that, please confirm to me that you got 1870.56 correct. 1870.56 exact. Yeah, Sumedha, Vaibhav, Pradeep, very good. Vinaya, all of you are doing it. I'm happy. Excellent. Very dedicated students. Yeah. Also, Supriya has worked out 1870.56. Supriya, good. Sumadura, good. Urvi, yeah, everyone got it. Good. Now the next step, continuing value को convert करना पड़ेगा. Present value of continuing value, PV of CV. Continuing value is also called terminal value. I told you. So continuing value is called CV or TV, terminal value. Now we find out PV of TV. PV of TV. How do we do that? 1870.56 upon 1.13 to the power 5. See here, present value of continuing value is 1870.56 divided by 1.13 to the power 5. 5 because 5 साल का data है. End of 5th year. Beginning of 6th year is end of 5th year. Yeah. So 1015.27 lakh is the present value of continuing value. And now the last step, value of the firm is 1015.27, that PV of continuing value plus 155.76, which is present value of FCF. Present value of FCF, PV of FCF. You get value of the firm as 1170.03, 1171.03 lakhs. So around 1171 lakhs, that is 11.71 crores is the value of the firm. This is the answer. ये आंसर लाने के लिए देखो how many hurdles we have to cross, what a detailed procedure, time consuming, laborious but sure shot. इसका जो आंसर आएगा वो श्योर शॉट आएगा और सही आएगा तो आपको 15 में 15, 16 में 16. You know, it's like whatever credit points attached, you'll get entire credit. Please confirm to me in the box that you have understood and you have calculated. Calculate करके देखो. ये PV of continuing value, आपका कंटिन्यूइंग वैल्यू आया था 1870.56, उसको डिवाइड बाय 1.13 टू द पावर 5. कैलकुलेटर लेके ही बैठो, आज के और कल के क्लास में कैलकुलेटर जरूर लगेगा, बिकॉज वी आर ऑन बिजनेस वैल्यूएशन. कल परफॉर्मेंस मैनेजमेंट में ज्यादा जरूरत नहीं पड़ी, पर आज और कल लगेगा. So 1870.56 upon 1.13 to the power 5. So you get 1015.27 plus 155.76. Please confirm that these calculations are correct. I'm waiting for your confirmation. Please confirm to me that these calculations you have done on the calculator, you have understood and confirmed that they are correct in all respects. So value of the firm is 11 crores, 11.71 crores. Yes, please confirm. 1170 Sumedha has confirmed. Purvi also has confirmed. Vaibhav, you are getting 1015.27. That is present value of continuing value. Okay, then you got the value of the firm also. Good. Sumedha, Vaibhav, Purvi, Pradeep. Yeah, you got it. Fine. So you have understood how to do valuation of firm or valuation of business using FCFF model. That you have understood. Yeah. So now what we do is we write down the format of the template that is required. Format of the template we will write down. Please write down the format of the template for FCFF. Write cells. अभी खाली template का format लिखो. Please take the writing material. I am dictating. Writing material you can take and write. Right, 1 2 3 4 5. It could be 5 years, it could be 8 years, 10 years. That is the forecast period. Explicit forecast period. By explicit forecast period कितने सालों का होगा मालूम नहीं. Explicit forecast period we don't know for how long it will be. But you write 1 2 3 4 5. Yeah, 5 years. Then you write sales minus operating expense. Don't write as per this. I'm dictating separately. So do write. So don't just copy from the slide. I'm dictating separately. Sales minus operating expense minus depreciation. उसके बाद एक लाइन खींचो. Sales minus operating expense minus depreciation. उसके बाद एक लाइन खींचो और लिखो EBIT. उसको बोलते हैं EBIT, earning before interest and tax. EBIT. उसके नीचे लिखो, हो गया. Shall I continue? Sales minus operating expense minus depreciation, उसको बोलते हैं EBIT. आपको ये फॉर्मेट या टेम्पलेट फॉलो करने में आसान जाएगा. While studying for the exam and while doing the questions in the exam, you will follow the same template every time. FCFF होगा तो. So sales minus operating expense minus depreciation will give you EBIT. Next line में लिखो NOPAT is equal to EBIT के बाद एक लाइन खींचो, and write down NOPAT is equal to EBIT into 1 minus T. NOPAT is equal to EBIT into 1 minus T. NOPAT is equal to EBIT into 1 minus T. Next line you write CFAT is equal to, ये मैंने टेम्पलेट पे नहीं दिया है बट आपको लिखना पड़ेगा. CFAT कैश फ्लो आफ्टर टैक्स. CFAT नेक्स्ट लाइन में लिखो CFAT is equal to NOPAT plus depreciation. CFAT is equal to NOPAT plus depreciation. अच्छा हुआ मैंने हर एक प्रॉब्लम आपको सॉल्व करके दिखाया. So my PPT contains the problem and the solution also. So CFAT cash flow after tax is equal to NOPAT plus depreciation. So आपका CFAT आ गया. Next line में लिखो minus delta capex. Please write down the way I am dictating because it is not given in the same format in this particular question. इसमें थोड़ा language wording expression है change. But for exam purpose, for simplicity purpose, short form purpose, you should write a shortcut and write down this format which should be always in your mind and back of your mind. So you have written CFAT, उसके नीचे लिखो minus delta capex. Minus delta capex, that is change in capital expenditure. Minus, next line लिखो minus delta WC. Minus delta WC. Minus delta capex लिखा. अभी लिखो minus delta WC. Minus delta WC. What you get is FCF, free cash flow. Abhi free cash flows. This cash flow, what was there? CFAT. CFAT is not free cash flow. It is only cash flow. वो free cash. वो difference पूछते हैं कभी-कभी interview में. What is the difference between cash flow and free cash flow? Cash flow is normal cash flow. What you get it from your operations. Free cash flow is free from all encumbrances, all obligations, all commitments. Free cash flow is that cash flow which is free from all encumbrances. Law, legal word. Encumbrances means your commitments. It is free from all obligations. It is free from all commitments. See, every company has to keep aside some funds for capex. That is future expansion. Every company has to keep aside some funds for smooth running of business. That is working capital. सो जब तक आप डेल्टा कैपेक्स और डेल्टा डब्ल्यूसी डिडक्ट नहीं करते, जब तक आप डेल्टा कैपेक्स एंड डेल्टा डब्ल्यूसी डिडक्ट नहीं करते, तब तक आपका कैश फ्लो, आपके कैश फ्लो को फ्री कैश फ्लो नहीं बोला जाता. Free cash flow is that cash flow which is free from all encumbrances. ENCUMBRANCES. It is free from all encumbrances. Cash flow which is free from all encumbrances, all obligations, all commitments. That is free cash flow. Dividend cannot be declared, cannot be distributed out of cash flow. Dividend has to be distributed out of free cash flow. Equity shareholders get dividend out of free cash flow after company has kept aside some amount towards capex and some amount towards WC. पैसा बाजू में रखने के बाद, कैपेक्स और डब्ल्यूसी में के लिए रखने के बाद जो बचता है कैश फ्लो, उसको फ्री कैश फ्लो बोलते हैं. एंड फ्रॉम दैट फ्री कैश फ्लो डिविडेंड कैन बी डिसबर्स्ड. So that is the difference between cash flow and free cash flow. Now this free cash flow, you have worked out free cash flow from operations plus non-operating cash flow. You continue with your template. You got the answer. Free cash flow from operations, FCFO. Add non-operating cash flow post-tax. Add non-operating cash flow post-tax. Non-operating cash flow post-tax. You get free cash flow. That's all in total. Free cash flow in total. Next line you write FCFF, free cash flow to firm bhi likho jara. Free cash flow to firm plus non-operating cash flow लिखने के बाद लिखो is equal to FCFF, free cash flow to firm, and you write FCFF is the basis for discounting. FCFF is the basis for discounting. When I want me to repeat after FCF, free cash flow, I said from operations. Yeah, please. Yeah, Senthil Kumar has given the feedback. I am very happy, Senthil. I am very much obliged by your good, kind words of feedback. Coaching is very good, clear explanation, informative and very useful. Yeah, thank you, Senthil. I am, for a professor or for a teaching faculty, this is the motivation. That's all. So thank you. Keep on studying and get good results. Pass and become the member of the institute. Become the member. Become qualified CMA. Looking forward to see you. Yeah. Okay. Vinaya, are you at par? Gross. I gave you my background yesterday. I have been into teaching for last 18 years, and therefore it is my passion. I left corporate job and came into this teaching out of my passion. So that is why it comes from within. I want to share my knowledge. I want to give maximum input to the students. That's always my attempt and effort for last so many years. That's a pleasure we get. All right. So you got you were on the format or template. I missed out, Vinaya. I don't know up to where you have come. Free cash flow from operations, FCFO plus non-operating cash flow. Non-operating cash flow will give you FCFF. आपने जो free cash flow लिखा ना, उधर free cash flow मत लिखना, उधर लिखो free cash flow minus delta capex minus delta WC, you get FCFO. आपने फ्री कैश फ्लो लिखा, उसके बाद लिखो माइनस डेल्टा कैपेक्स माइनस डेल्टा डब्ल्यूसी, इट इज FCFO. FCFO में ऐड नॉन ऑपरेटिंग कैश फ्लो, ऐड नॉन ऑपरेटिंग कैश फ्लो, यू गेट FCFF, फ्री कैश फ्लो टू फर्म. You get free cash flow to firm. Vinaya said FCF from operations. उसमें add non-operating cash flow post-tax. Add non-operating cash flow post-tax. Vinaya, add non-operating cash flow post-tax. FCF from operations, FCFO plus non-operating cash flow after tax will give you FCFF. Is that all right, Vinaya? Will give you FCFF, FCFO plus non-operating cash flow after tax plus non-operating cash flow after tax will give you FCFF. Write down which is the basis for discounting. Which is the basis for discounting. FCFF is the basis for discounting. So we discount this FCFF to present value and then do continuing value. And finally, value of the firm का formula लिखो. That also I am dictating. Value of the firm is equal to value of the firm under FCFF. Value of the firm under FCFF is equal to PV of FCFF. Write in short, PV of FCFF. Value of the firm under FCFF approach or FCFF method is equal to PV of FCFF, PV of FCFF plus PV of TV plus PV of TV. TV is terminal value, or PV of CV भी बोल सकते हैं, continuing value, plus PV of CV or PV of TV. I repeat, value of firm, business firm under FCFF approach is equal to PV of FCFF, present value of free cash flow to firm, PV of FCFF plus PV of CV, PV of CV, CV or continuing value, and PV of TV भी बोल सकते हैं, PV of terminal value, one and the same. कुछ भी लिखो चलेगा, PV of CV या PV of TV. This is the formula for value of the firm. Please confirm, every one of you in the box, that you have understood and you have written the template, and you have understood, you have written the template through with writing. Please confirm. Yeah, Mukesh Sharma is writing, done sir. Sumadhura is writing, understood. Yes sir, well explained. Vaibhav, thank you Vaibhav, understood. So long as you understand, I am very happy. Yeah, so this is FCFF method. Follow, I am telling you, follow this template as it is. In exam you will get full 15, 16 out of 16, comma, in case there is a question. There is no compulsion. Always I fear and I am afraid that every topic may not get covered in the exam. You know very well, every topic may not have its weightage in the exam, obviously, because there are so many topics competing with one another, so many topics competing with one another, and therefore किसको ज़्यादा importance देना, किसको कम देना, that is left to the discretion of the paper setter. So don't worry, you keep on studying. All right, now this is the template I gave you for FCFF. For FCFE, once again you don't have to write, I will only tell you where is the change. FCFE के लिए change कहाँ है, मैं खाली उतना बताता हूँ आपको. So you will come to know if this is to FCFF, how you should make the change. I go back to the template, sales minus operating expense minus depreciation, EBIT, ये सब करने की जरूरत ही नहीं है, because I told you in FCFE method the starting point is PAT and not NOPAT. Starting point is PAT and not NOPAT. So we will start with PAT, profit after tax, and then add depreciation to get cash flow. We take profit after tax, PAT, and then we add back depreciation to get cash flow. So the starting point is PAT and not NOPAT. In FCFE, the starting point is PAT, profit after tax, and not NOPAT. PAT के लिए आपको sales, operating expense, depreciation ये सब की क्या जरूरत है? आपको EBIT, interest ये सब करने की जरूरत है? Directly PAT figure is given, उसको उठाओ. PAT को आप expand, PAT को estimate करो, forecast करो for next 5 years. So that PAT plus depreciation will give you CFAT. PAT plus depreciation is CFAT. CFAT minus delta capex minus delta WC minus delta capex minus delta WC, yeah, will give you free cash flow from operations. उसमें non-operating cash flow you add. So change here is starting point is PAT and not NOPAT. That is change number 1. Change number 2, when you are discounting this free cash flow, it is free cash flow to equity, right? After you take aside money for capex, for WC, जो पैसा बचता है उसको बोलते हैं free cash flow to equity. उसको जब discount करोगे, discount it at KE and not KO. See, here we discounted the future cash flows we discounted the future cash flows at KO 1.13, 1.13 square, etc. But when you are using FCFE method, you have to discount it at KE, like to like operation, like to like, क्योंकि न्यूमरेटर में क्या है, FCFE है ना, तो डिनोमिनेटर में आएगा कॉस्ट ऑफ इक्विटी, कॉस्ट ऑफ कैपिटल नहीं ले सकते. न्यूमरेटर में FCFF है तो डिनोमिनेटर में ग्रॉस अपॉन ग्रॉस, इसके लिए वैक आएगा, वैक KO आएगा, राइट, इफ इट इज ग्रॉस. न्यूमरेटर में नेट है तो डिनोमिनेटर में भी नेट आएगा. इफ इट इज FCFE है तो डिनोमिनेटर में KE आएगा. इतना माइन्यूट चेंज, you have to minor difference you have to keep in mind and make the correction, make the change, then only your answer will be correct. Then continuing value as it is, everything only KO की जगह KE आएगा, and therefore whatever value you get is not value of the firm but that is value of equity. आपको ये सब कैलकुलेशन करने के बाद जो आंसर आएगा that is value of equity. आपको value of equity नहीं चाहिए, value of firm चाहिए. So value of equity plus value of debt is value of the firm. आपको value of the firm चाहिए तो value of the debt add करना पड़ेगा. Debt is how much in the firm, that you have to go by the balance sheet, by the figure, and add to value of equity. Value of equity plus value of debt is equal to value of the firm. So जो आंसर आएगा इस मेथड से उसको बोलते हैं value of equity and not value of firm. Whereas FCFF से आप derive करते हो, that is value of firm, like to like always. So you can write one more line that while calculating value of equity, we divide FCFE by KE. We divide FCFE by KE. For calculating value of equity, we divide FCFE by KE. For calculating value of equity, we divide FCFE by KE. FCFE upon KE into bracket like to like operation. वो भी लिख के रखो so you understand why. Like to like वो भी लिख के रखो why you are doing like this. Like to like operation. So value of equity is equal to FCFE upon KE. That is value of equity. And next line you write value of equity plus value of debt is value of firm. Value of equity plus value of debt is value of the firm. Please confirm to me that all of you have written this formula and you have understood. Value of equity plus value of debt is value of firm. Please confirm. Value of equity plus value of debt is equal to value of firm. Yeah, thank you. All of you have given correct answer. I mean, written to me confirmation. Good. Now we have real dialogue between us. That's good. That's how interactive session. Now we have solved already 3 questions. Though it is solution 4, we have done 3. 1 question in between we have skipped. So that we will look at. That is a question in isolation only on FCFE. Only calculate FCFE. See, sometimes in the exam you may not have a complete question on valuation. You may not have a complete question on valuation in the exam. Sometimes it may so happen that instead of asking you to go through the complete step, all steps and get this value of the firm, abhi jaise is question mein humne nikala 11.71 crores is your answer. But of course itni mehnat karne ke baad ye answer aaya to usko weightage bhi अच्छा खासा होगा. You will have a weightage to this type of question 12, 15, 16, 20, something like that. 10 minimum 10 mark तो रहेंगे ऐसे question को कर लेंगे. But sometimes you know in the question paper you are asked a small question which tests your conceptual knowledge, right? Which doesn't want you to calculate value of the firm or value of the equity. इतना लंबा चौड़ा पसारा करना ही नहीं है. The paper setter wants you, the examiner wants you to test your knowledge only on conceptual understanding of FCFE. Does final student understand what is FCFE? Does final student understand what is FCFE इतना और FCFF? बस इतना ही टेस्ट करना है. And therefore instead of asking the entire question on valuation, one leg of it may be pulled out. एक छोटा सा part may be covered and asked in the exam. One leg may be pulled out. What is that question? I will show you. That is exactly a short length question of 5 to 6 marks. So let us see how that type of question can be framed. We will solve this as the last question for the day, and that is calculation of FCFE alone. Yeah, nothing else. This is exercise number 2. Exercise number 2, FCFE. Sun Limited has projected the following figures for the financial year 18-19 that can now become 2021 also, or 21-22. Yeah, that's not important, but these projections are given. Net income after tax 130 crores, depreciation 50 crores, capital expenditure planned 80 crores, additional working capital needed 25 crores, principal repayment of debt 10 crores. So you are repaying the debt, so that is also resulting in cash outflow, that is 10 crore. Now I'm reading next paragraph. As the firm has a very low debt equity ratio, firm's debt is lower, very low. Debt equity ratio is low. It plans to increase its leverage. Leverage means debt content. Company wants to increase its leverage, increase its debt content by financing debt repayment and 30% of planned capex and additional working capital needs by raising fresh debt. See, company wants to raise the fresh debt. Company ka debt equity ratio is very low, very less. Company's balance sheet debt is very less. So company wants to increase the debt equity ratio. How and for what reason? Because company is raising the debt mainly to finance, to repay the old debt, right? Repay the old debt and meet 30% of the planned capex and additional WC needs by raising fresh debt. Fresh debt raised will be used for repayment of existing debt, right? By financing debt repayment, existing debt will have to be repaid, and also 30% of the planned capex and additional WC will be met out of fresh debt. So project the FCFE for 2018-19. Project means you have to prepare the forecast or an estimate only for 1 year what will be FCFE. So you have to calculate what is FCFE. I told you the formula FCFE. You start with PAT, profit after tax, add depreciation, minus delta capex, minus delta WC, right? You will get free cash flow from operations. Non-operating cash flow, if any, ये तो इधर नहीं है, that is free cash flow to equity. So let us work out what is free cash flow to equity. I give you 2 minutes. Any questions? Meanwhile, you can ask on this exercise or in general also on any of the methods what we have discussed. Value of equity plus value of debt is equal to value of firm. Pradeep has written in the question. That's right, Pradeep. Absolutely right. Value of debt plus value of equity is value of the firm. Correct. Solve this exercise too. It's very simple, but only tricky in terms of the language. Company is raising fresh debt. Any fresh debt raised will add to your cash inflow. Any fresh debt raised will add to your cash inflow. And repayment of existing debt will reduce your cash inflow. So all activities which result in cash inflow you add. All activities which result in cash outflow you deduct. So raising of fresh debt will add to your cash inflow. And repayment of existing debt will reduce your cash outflow. So this cash inflow from fresh debt will be used for a repayment of existing debt and to meeting 30% of the planned capex and additional WC. Meeting 30% of the planned capex and additional WC. Okay. Just 2 minutes I am giving you to do the quick calculation on the calculator. Anyway, I am going to show you the answer, you know very well, but don't wait for my answer. Try to do it yourself. इनकम दिया है आफ्टर टैक्स, दैट इज पैट. डेप्रिसिएशन ऐड बैक करो, सीफैट आएगा, माइनस डेल्टा कैपेक्स माइनस डेल्टा डब्ल्यूसी, रीपेमेंट ऑफ डेट माइनस करो, प्लस एडिशनल डेट कितना रेज करना है वो दिया नहीं है, बट इट इज गिवन दैट एडिशनल डेट विल बी रेज्ड so much so that additional debt raised will be so much so that additional debt raised will be so much so that which will help you to repay the existing debt and meet 30% of the planned capex and additional WC. I'll wait for your confirmation. I'm waiting for your confirmation that you have understood the problem and you are trying it. Take 2-3 minutes to quickly check the calculation on the calculator. Anyway, I'm showing you the approach in 5 minutes time. Sumadura is writing 106.5. Is this the amount of fresh debt raised? Sumadura, is this the final answer or is this the amount of debt raised? Is this the amount of debt raised or is it fresh debt raised or is it FCFE? You have to work out FCFE. Achha, final answer 106.5. Okay, let others calculate. Let us see. I'm waiting for others to get me the answer. You know what is FCFE? It is PAT, add back depreciation. So you convert it into CFAT, cash flow after tax, minus delta capex, minus delta WC, minus repayment of existing debt, plus raising of fresh debt. And raising of fresh debt, how much is not given? But I told you it is given that fresh debt will be raised so much so that it will enable management to repay the existing debt and will also take care of 30% of the planned capex and additional WC needs. Okay. New date issue is 41.5. Some other area is asking new date. How we concluded that it's for repayment of existing also, sir? Yeah, it is given in the question. Okay, Vaibhav is asking how did we conclude that it is repayment of existing also. The date which is raised is for repayment of existing. Diya na? Company plans to increase its leverage. Leverage means debt by financing the debt repayment. See, by financing the debt repayment, you are raising the fresh debt in order to finance the debt repayment. Existing debt repayment कैसे आएगा पैसा? Finance कैसे करोगे? By raising fresh debt. Vaibhav, are you with me now? Vaibhav, are you with me now? Are you with me now, Vaibhav? Okay. And FCFE comes to 96.5 by Pradeep Kale. Whereas Sumadura is getting 41 point, no, she got final answer as 106.5. Let us see 106.5 and 96.5. Let us see. Yeah. I'm going to the next slide. Answer slide. Answer is 106.5. So I think Sumadura was right. पहले किसने आंसर किया था? सुमधुरा ने, नो? Sumadura answer 106.5. 106.5 was answered by, yeah, Sumadura. Yeah, okay, Sumadura. 106, no, 96.5 nahi hai, Pradeep. It is 106.5. I'll tell you and then you tell me whether you have understood. Yeah. Congratulations, Sumadura, but it's 106.5, sir. The difference of 96.5 is that repayment. Correct. So you got it, Vaibhav. Look at this. Net income after tax is 130 crore. Add depreciation 50. Less capex 80. Less working capital 25. Less debt repayment 10. Add new date raised. अभी new date raised के लिए working note बनाना पड़ेगा. We'll have to prepare a working note for new date raised, which is 41.5. 41.5 कैसे आया new date raised? To repay the existing debt, that is 10 crores plus 30% of capex plus working capital. Capex 80 है, working capital 25 है, so 30% of 80 plus 25 plus 10 crore, that is 41.5 crore. So new debt raised will be 41.50 crore. 41.50 crore, that is a new date that is raised, and new date raised will increase the cash flow, and therefore we have added 41.5, we have added, yeah, and that is free cash flow to equity 106.5. So I want all of you to take down the template or the format for FCFE. आपने FCFF के लिए लिखा. Similarly, you have to write the template or the format for FCFE also. Please write down PAT, write down FCFE template, FCFE template, free cash flow to equity, FCFE template. PAT, that is net income after tax, add depreciation, लाइन खींचो, पैट प्लस डेप्रिसिएशन एक लाइन खींचो, उसको बोलते हैं CFAT, कैश फ्लो आफ्टर टैक्स. पैट प्लस डेप्रिसिएशन उसको बोलते हैं CFAT. पैट प्लस डेप्रिसिएशन इज कॉल्ड CFAT. लेस डेल्टा कैपेक्स, लेस डेल्टा WC, लेस डेल्टा कैपेक्स, लेस डेल्टा WC, लेस डेट रीपेमेंट, existing debt repayment, less existing debt repayment, add new debt issued, less existing debt repayment, add new debt issued. जो repay किया उसको deduct करना पड़ेगा cash outflow, जो new debt raise किया उसको add करना पड़ेगा cash inflow, add new debt issued, that is equal to, line खींचो, that is equal to FCFE. ये जो सामने दिख रहा है वही template है आपका. PAT plus depreciation, that is CFAT. CFAT minus delta capex minus delta WC minus repayment of existing debt plus raising of fresh debt, what you get is FCFE, free cash flow to equity. Please confirm in the chat box that you have understood. Confirm in the answer box that yes. Acha Pradeep, you consider depreciation wrong. Okay, that is why your answer went wrong. Okay, no problem. But now you understand from these mistakes. Confirm that you have understood all 4 methods which I taught you in today's class. I taught you 4 methods of valuation. 1, dividend discounting model. 2, FCFE. 3, FCFF. And 4, comparable relative valuation method. Comparable company approach or relative valuation method. Generally, there is one question of full 15 marks, 20 marks, 10 marks, 12 marks like this on valuation using any of these approaches. And therefore, today we have, okay, Vinay, your laptop hanged and therefore you switched to mobile. Fair enough, we are ending the class now. We are through with our learning for the day. In tomorrow's last class, I will be solving questions not on this business valuation, but on valuation of brand, intangibles, valuation in context of mergers and acquisition. I told you at the beginning of the class today, these are the topics: valuation of human resource. So from the past question papers, past means from the new syllabus, of course, December 19, June 19, we will solve from the past question papers some questions which are asked in the past on any of these topics. So most important according to me is merger acquisition, valuation in context of M&A. So tomorrow I will cover that, valuation of HR, valuation of intangibles. So let me, and those EVA, MVA, etc., those terms, let me cover them. Time is very limited because 3 days, still I devoted 2 days because this business valuation is a practical paper. I devoted 2 days for business valuation and only 1 day I gave yesterday for performance management because it is predominantly theory. But these 2 days also, frankly speaking, are not sufficient for valuation if you want to touch upon and do practice in each and every topic and get confirmation, get satisfaction. So because that is why it is called crash course, which is given in capsule form. Crash course gives you knowledge in capsule form. Ideally speaking, this is not the time to teach you how discounting is done, how WACC is calculated. Itna step by step जाने की भी जरूरत नहीं है देखा जाए तो. But because students have to refresh their memory and mind, we have to go through this. Ultimately, your satisfaction and your understanding is more important than anything else. Okay, so therefore I will be covering those other topics tomorrow: valuation of brand, valuation of intangibles, like goodwill, etc. Then valuation in context of mergers and acquisition, and EVA, MVA. Those three main concepts I will cover. About FCF, FCFE, FCFF, DCF. Now I will not talk anything. Yeah. So so we have covered 4 methods, and we have also covered 4 exercises from this slide. Rest of the exercises you can do on a self study. I think there are 5 exercises which are given. Yeah, exercise number 5 is further very lengthy. See here, and that is again on FCFF method. You are required to find out the value of Anmol Industries using FCFF. Operating cash, it's not given, but it is understood. And see, this is the answer, very structured approach. I'm just showing you. If any figure goes wrong, any of these figures goes wrong, you will lose the mark. Final answer goes wrong. That's all. So this was the last slide, solution 5 and question 5. So question 5, I leave it to you for your homework and for self-understanding. Today itself, after my class, maybe after you refresh, you can study this question number 5. And any doubt tomorrow, if you have, you can ask me. I will elaborate and clarify some of the figures if required. Not entire problem, but some of the figures if you require, I can clarify to you in tomorrow's class on exercise 5. But if there are no questions, I will start with valuation of intangibles, valuation of brand, human resource, EVA, MVA, and valuation in context of M&A, mergers, acquisition. बहुत सारा चीज बाकी है that we will cover in tomorrow's class. Thank you very much for your patience and commitment. I must say commitment. Yeah, because all throughout you are sitting for 3 hours. We don't even take any break. 3 hours continuously you are sitting. I'm really charged by your feedback. I'm really motivated by your feedback that you have been benefited. It all depends on the students. How much benefit do they take from the facilities which are provided by the institute? WRC is going out of the way and giving these facilities. You know, all professional members, our fellow colleagues, they are helping us out in putting up this digital platform. So all are to the service of the students. Our humble request is students should make use of this service, this facility, this platform during this pandemic, and overcome their shortcomings, if any, and prepare for the exam. That's all. I am happy, Samadhara, writing. I understood all the 4 approaches very effectively. I gain confidence. Thank you, sir. Thank you, Madhura. It all depends on your interest, your initiative. Yeah. And I really appreciate all of you and your patience. That 3 hours without break, sitting at one place doing the calculation is not so easy. Getting yourself involved by, you know, line by line calculation, cell by cell figure, that is something which is challenging. So tomorrow also be prepared. So refresh yourself, and tomorrow come with proper preparation. We will spend proper time for remaining topics. Yeah. Thank you very much. I take your leave for the day today. Thank you.
Thank you so much, sir.
Thank you. Thank you. Thank you for your support. Otherwise, it was not possible. And thank you to our Virak sir also, if he's there.
Sir, can you end the session?
Yeah, you can close the session. No problem. I'm through.
Oh, thank you so much. Bye.
Thank you. Bye.